All right. Good morning, everyone. Good morning, good afternoon, good evening, depending on where you are in the world. My name's Tim Fairweather. I'll be hosting the Brooks Trading Room today. Hope you're all well. Who have we got on the line? Just double checking. Mike's good. We're on TradingView. Coming in hot. Who we got? We've got hi Joe Khan Dad. We've got hi Akut. D went. We've got Rory Sarur. Looking forward to seeing everyone very soon in Orlando. I'll be jumping on a plane tomorrow and pretty excited about it. If I'm a little bit slow on Friday, you'll have to forgive me. I'll be jet lagging hard. Body hasn't quite got the coffee mix in yet, but I'll do my best. So just playing around with some measured moves yesterday. I thought we'd start on the daily charts. So it was interesting that the high of this outside bar was exactly this measured move. And it was something we were looking at because I was on the session the day after this on the 26th of April, I'm pretty sure. And we were saying this was the measured move here, which made sense. That was the signal bar. We had a bear spike and a very strong reversal. Consecutive bull bars triggered, came back to test the limit order sellers that would have been above some of these bars. They could get out break even. And then these limit order traders, when it got back there, exited, and that created quite an interesting bar here for a buy signal. And on the session, we were talking about what to do when this happens. When you get a very strong bull bar, it's below the moving average, and it's in a bear channel. Yes, you're looking for a reversal, but it's often a pretty bad place to take a trade. You've got big risk. You've got the moving average right above you. It's it's low probability for this just to break through and never come back. It's more likely that this comes back to a place of value, and then you can buy with the rest of the bulls. And that's what happened. Sometimes it doesn't do that. It doesn't come all the way down to this tail. It comes down to the higher low, and then you can see in that lower third some really great places to buy for a long setup. First target, moving average, and then onward. And then once you've got that very strong bull spike, a couple legs up. 1, pause, 2, pause, 3. So parabolic wedge top. We're expecting a couple legs sideways to down. And that's what we're sitting in at the moment. We had 1, and now we're in the second leg down. And although it looks very bearish, the issue here is the same issue the bulls have got here, is that now you've got the moving average in the way. What I've marked is, I think it's a weak low 2 signal bar. This bar here is, from what computers will look at, a bull bar. It's closing above its midpoint. And we also went above this bull bar. So it's an outside bar, but it got a bear breakout and follow through. So I don't think it's a great place to sell, but I think it's an indication there might be a sell coming soon. This is pretty strong. That's on the overnight. And if we go back to the RTH, what I was looking at is the comparison between this pattern over here and this pattern here. We had big outside bar surprise. So we opened above, closed below. We had a small inside bar, inside bull bar, small inside bull bar. Then here we had an II, so market's still deciding what to do, went just above the high of this bar and sold off. And I was a little bit upset at myself because I was ready to sell, but the sell happened basically on bar 1 yesterday, and I was a little bit slow setting up because I don't usually have lots to do on bar 1. And unfortunately, I looked at my notes, which said, get ready for a sell early in the morning, and I was like, missed it. Anyway. But that worked out really well, and then market came back, and now trying to decide. Usually when you've got a tight trading range far from the moving average, or it gets a little bit confusing, are we still in the move up? Have we started a correction? The market tends to drift back to the moving average, which is where we're going now. That's where the ETH is. So here, inside bar is not a great sell signal. You can see here, went down, bear breakout, pulled back, and then that was the sell up here. And then traders will usually look at this bar, or at least myself, I'd look at this bar as the high 2. And if we trigger that high 2 and you short, I'm out 1 tick above that. But if that doesn't trigger and we go below it, then it sets up potentially a measured move down. And you can see as soon as that bar closed below, people very quickly said, okay, well, I got long. I need to buy below to see if I can get out. I'm out break even, and then short. So this is one possibility. The other is we do the reverse and we go above that, but I think these bulls are up break even. So they're okay. These bulls fall below, they're okay. They actually made money back to their original entry, so they did really well. So if we go to the ETH chart, this big bull bar, I've actually put a line down there saying, 52, what's that, 52.73. I can tell you exactly. 52.6625, that's the last bull bar in this bull trend that we need to watch to see what happens to these bulls. Can they get out break even? Do they buy more? Do they get back to that entry? So we shall see. Now, any questions from yesterday? How did everyone go? Where'd you buy? Where'd you sell? Where'd you get out? How'd you manage? Management's a really important part of trading. I never really paid much attention to it, but that's where a lot of the profit's made. Having really clear guidelines to get out. You don't do stupid things like scale in 3 times to a spike in the opposite direction, etc., etc. You stay in or add on when you get a really good entry bar and a follow through. So we're up at the high of last month. So we had a 5-bar bull micro channel. We expected buyers below that low. There's probably going to be buyers below this low because you can see the urgency the moment that third bull bar closed. Above here, we tested that gap. No one wanted to be short down here anymore. And this was a reasonable short. It's a lower high, potential double top. This is pretty strong, but if you're selling here or selling here and that's your entry bar, then you need very clear rules on what comes next. And if that's the follow-through bar, then you need to get out above that. Some traders will sell more, try to get back to that entry, but there's always the possibility that you just need to get out of the way, which is what happens on that bar. So 3 closes is generally enough for counter traders to say, yep, I'm wrong, and then time to reverse or look for a second leg up. So very bullish, and we closed that breakout gap, but I think there's still a small gap between the body of this bar and the body of that bar. So for me, still bullish. The bears really needed to close that quite strongly, and you can see the same logic that applies on this bar. As soon as it closed, bears got out of the way. As soon as that bar closed, not many people were selling below that. So sideways to up, at least on the monthly chart. Weekly chart, an attempt at a double top. We've got a new high, so we're in a bull channel. And then same again, the 3 bars here. Sorry, on the monthly, the 3 bars there, traders selling above. And then we've got 3 bars here, traders selling above. And they've already made a scalp there. So we'll see if they hold. Micro gaps, and so strong buying pressure. But I think because of the strength of this move, I'm expecting to come and overlap some of these bars. Maybe not now, maybe in a couple of weeks. Not a great signal bar for a super strong reversal, and we need to get below it. So, and daily charts we've been talking lots of. So that was just to say where the ETH is. So on the overnight, interesting strong sell-off, and then pull back into the top third, and then we're in the lower part of this trading range, and not a lot of buying pressure as yet. So if we go, zoom out a bit. G'day Hugh, g'day Tom. Thanks for joining. So here we've got a strong bull spike, and when you have a strong spike, it's usually good to put a line underneath that. It's like a strong bull bar on any chart. So imagine that's one strong bull bar, traders are buying it, traders might buy the midpoint, and in bull trend, traders might also buy below it, and we're coming back down to that area. But it's not showing any signs of buyers as yet. Some of these bears I think might be looking for a measured move. Maybe down here. This is very sideways on the hourly chart, and that's why I think the daily chart's a little bit easier to understand at the moment. Inside bar, probably buyers, and we've got the moving average 20 points below. So, thanks, Rose. Oh, I have the hourly ETH on. So, very strong selling. Even if you sold this bar, you sold more higher, you could get out of break even. So no bears are stuck here. These bears are still live. The stop above there, these bears are still live. So bears still potentially on a swing. Bulls didn't have a great signal bar down here, but a strong reversal, and they're trying to get a double bottom. So you can see this double bottom attempt here, and then if I put on the ETH, what happened to the double bottom? It broke below it. So it'll be a little bit clearer when we open. I kept the open of the week up there. So that was the sell yesterday, which I missed. Bad, Tim. Should have. That's one of those, daily setups. You just have a bit of a shot and you kind of Walmart it. So you put it on an account that you're not day trading, because otherwise you'll play with it. And then you pat yourself on the back when you close a trade that's going badly, and then when it goes all the way to the other side of the daily bar, you'll be annoyed you didn't hold it. So bear spike, but so we had one attempt to break out of the day before. Let me just back up that so that my magnets will go across. Oh, a little bit slow on trading, isn't it? We had an attempt to break above the high of the day before. We had a second attempt, came back and tested, and then went down to the lows. And that's pretty common. If you go back and look at a lot of charts, the market usually will have a couple of attempts to break out. Sometimes it will break out and then have a couple of attempts to come back into the range. So you'll see the flip side of it. So here's an example. We break out at this range, and then bears tried once, twice to get it back down there, and then that becomes the line in the sand for the rest of the range. So, but it was a trading range day yesterday, and not easy to trade. Not easy to trade at all. I sat in a trade for a long time in here. And then I ended up closing a little bit early because I just had to go to bed. It was pretty tough. I missed the sell. I tried to sell above. I got a couple of points in there. And then we had 15, the big bull bar that got follow through. And then I bought the midpoint of 15. Thinking to myself, if you're a bear, who wants to sell at the moving average after a bull spike? And then, yeah, this took about an hour to get paid. I don't know how everyone else went yesterday, but a bit difficult. A little bit better in the afternoon. Market finally broke out of something, so consecutive bars below the moving average here, and then attempted double bottom breakout. If you're not good at trading these breakouts, then you usually get a really good opportunity to sell the pullback. Don't buy this. If you're looking at this, that's one I used to love doing as a beginner trader. Missed the sell and then thought, oh wow, low risk, good looking bar, and then it goes sideways and then you get stopped out. And so don't do that. Breakout point, but you don't just have to put an order there. You can wait for sideways here on 56, and then now you've got a tail. Now you've got hesitation. Now you've got sideways. Versus, what's another example? So that's a bear breakout and pull back here. This was on, I think, our session. You might think we're breaking out of this, so you have a limit order to sell there. It's okay, but you have to be prepared for this. It's usually better to wait for something to go sideways to sell above. And now you're selling, you don't really want to sell here anymore because you've got a breakout of that range. So, out that range. So. I was in. Hi Tom, which long was that? What's the bearish bad discipline? Which day? The 23rd or yesterday? So when did you get out? Yes, I got from bar 15 yesterday. And that's the thing, you know, you're in a trading range and then it looks like the bears are going to break out of something, but just stops and reverses immediately. You didn't sell there, and now you're presented with a buy up the top. You don't really want to buy up the top of that range. We were just at the bottom of it. So, you know, has the market shifted in 5 minutes? Probably not. And it can take a bit of, I think, a bit of courage to ignore this bar and ignore this bar. Okay, to sell up here, I think that's all right, you know, test of the open, but, you know, it's 1, 2, 3, 4, it's 20, 25 minutes until you get to click a button. But when you're learning trading, you see the bar, you click the button. You know what I mean? And the difference between that and actually making money from trading is about 15 to 20 minutes. And I'd also argue, in terms of reading price action, it's probably about 10 or 15 minutes as well. Most traders can see what's happening here, as opposed to beginner traders can see that here. They can see the high 2 should have worked and gone up, and it's failed, and it's failed, and now it's sell above. So it's really all about that 10, 15 minutes. Wish there was a shortcut for it. Got out around 53. So you held for 40 bars. 53 after the high 2 failed. Well, I mean, my only comment, and I appreciate you sharing it, because my only comment is if I'm long and there's a second entry short, I need to get out. So for me, that's a second entry short, or this is a second entry short, but at some point you need to get out. Bear bar closing on its low. Also, because it's a trading range, I'm trying to buy low, sell high. So if I'm long, and you can see how it goes along this top third, and where limit order computers are just having a shot at a 2 to 1. At some point, this is going to drift back into the middle of the range, and that's not really where I want to be. And so when it comes back up into that zone, I need to get out. So the trade is buy somewhere low, immediately get out in the top third, or drift in the trenches, starts going sideways, it usually pulls back, and you get, here you've got 2 chances to get out. But sometimes it just drifts back. And the same applies if you enter and it doesn't do what you want it to do. So you enter here, so you take that short, it goes down into your area and you think, oh, it's a really good entry bar, maybe it's going to go all the way. It reverses and it comes back to your entry. Usually I just get out of that trade, because the trade here and the trade here for me are different. This was spike, potentially second leg down. Now we're drifting to test the highs of the range, so I don't really want to be in that trade anymore. Yeah, the longer you hold the trade, the more merit. Yeah, and that's why I like to get out. You know, 6 to 10 bars is usually or less if I'm scalping. Like if I'm swing trading, you know, long in here. This I was presenting, so I was just scalping, but there was no presenting. Didn't do any swing trading there. Where was the parabolic wedge top? Yeah, this one. You know, you're buying here, betting on a test of the range, so you've got to sit through a few bars. And then if it fails, well, you know, you don't get paid, but you got to hold to get paid. So with that discipline, you know, it's like, how do we get, you know, how do we put rules in place which are going to help us follow the discipline? One way I help myself is I have a 2-minute chart here, and because I like to trade breakouts and follow-throughs, Okay, let's just imagine we're short here. I don't want a lower time frame breakout and follow through against me. So my definition for that is that's going to be a bull bar closing above a bull bar or a bear bar closing below a bear bar. So I'm short here, short. Strong bull bar going above it, not a reason for me to exit. I need a bull bar closing above another bull bar. We didn't go above it. Bull bar didn't go above it. Didn't go above it. Here, I have to get out. So for me, that's my rule that helps me. And sometimes it means it takes you out of trades that work out later. That happens. But most of the time, it works well. So you have a simple rule, and then you just try and follow it. In Van Tharp's book on trading psychology, talks about a mistake is not following your own rules. And I like that definition. So you come up with a rule, you don't follow it, that's a mistake. You don't have a rule, that's also a mistake. So it makes it nice. And for every setup, I would have a bit of a rule or an idea of what you're looking for. That helps. G'day, Sarur. Do you use a shortcut in TradingView? I mean, there's hotkeys, if that's what you mean. But do you use a shortcut in TradingView? I mean, there's hotkeys, if that's what you mean. Hi, Matt. Was there a bull reversal signal bar? Is this for yesterday? Or is that talking about the exits? Because I didn't read your question until I drifted far from there. So if you just give me a bit of context, I'll come back to it. On the V reversal here, yeah. So here's double bottom. Most V reversals, double bottoms. Come back up, boom, test, and so here high one, pull back, and then high two. So here, you know, so there's the 3 bars against you, exit. Oh, good day, Ed. Yeah, DAX was tricky. DAX was tricky this morning. What did I do? I thought this was going to be a wedge. Let me just get that off. So, yeah, I took a loss early. I thought this was going to be a pretty clean bear trap, and then because the 60-minute chart has a wedge bottom, and we triggered the buy. And so I was trying to buy low here, and then this bar closed. I thought, oh, it's a little bit bearish. I was hoping for a bit more of a tail, and in about the 2 seconds take to close, we were down here. So I took a loss. I don't know, probably 15 or 20 points, in the first half an hour, and then old Tim would have got really upset and frustrated. But the correct action is then to sell for the second leg down. So I managed to make it back. So I sold, and then I got a really good entry bar 10, and then if I was flat, I would have sold, and I'm already in a trade, so I added on, and then got out on the close of 11. So that was lucky. I got it back, and then this was tough. Same thing, huge bull bar. What do you do here? I don't want to really buy the top or the midpoint, and then I got out at the close. I was going to hold to see if we got back up to the open, and then it just drifted back, and then I was hoping there were going to be buyers down here, so I missed the sell. It's a tough morning. Lucky to be green. So, was there a bull reversal signal bar? Yeah, so the way I read this, limit order traders cannot get in, right? So never let traders get here. We're down, pull back, down, pull back, down, pull back, down. So we've got 3 legs down and an overshoot. And when that happens, sell above there works. Now we've got 3 consecutive bull bars. So if I was short, even though this hasn't broken above these bars, that's really not what I want to see so far from a moving average in a late leg. So that's usually where you get out, and you can see the moment that closed. So that's something I'd look at. A strong spike goes sideways, 3 consecutive opposite bars, and then everyone gives up. So that's more of a what you call a reversal without a signal bar. It's basically just the traders exiting, as opposed to a signal that fails like this. So triggers, and then what a disappointing entry bar, you know, for high of the day. And then, oh, follow through is rubbish, everyone gets out. No point scaling in below it. Consecutive bear bars, sell. So it's that's how I'd look at it, the 2 different scenarios. 57 is a limit order sell at the breakout point. Yeah. It can be hard to take because of this. So that's why I said you wait for 56, because if 56 breaks through, then you don't just want your limit order sitting in space, but then it goes sideways, and so you can either sell above or wait for 57. And sometimes it just helps to wait for the first 2 minutes of the bar and just to see what happens. And if it's not shooting up, then those bulls are probably not there. So overnight chart, very strong bear channel. And we've pulled back to this breakout point here. And that could mean that the measured move might be a larger measured move. This is the bottom of that bear spike. It's the low of last week, and we've got a couple of magnets down there. So I wouldn't be looking to do too much at the moment. We're far away from the moving average, and we've had many legs down, so we might need some kind of climax to go through that bottom of that channel. We have tested that point there, and if that's the pullback test, that means the measured move might be down somewhere there perhaps. Bottom of that bull spike, 52.70. Get rid of those. So we're opening down here. So we're about to open. We'll be opening with a gap down. Pretty big gap down. Oh, let's get rid of a bit of a delay on that one. So about 40 points below yesterday's close. We're at the bottom of this trading range. And on the RTH, because we've got a gap down, we usually have to give the bears a second chance to do something. So gap down, pull back, often the second leg down. Because the gap's so large, it's usually good just to wait and see what happens. So I'm not looking to buy or sell or do anything just yet. Let's get rid of that. No news today that I can see, or no red news. Oh, Oliver, I just saw your question. The ETH 1 hour has been a very tight bear channel. That's still part of the bigger trading range. So that's 15, that's 15, that's 5. Let's make it bigger. Let's get on the hourly. So I was saying, here's a tight bear channel on the ETH chart. So I often look left to see what range, kind of what frame I'm dealing with here. So strong collapse, and then a pullback all the way to the top third of that range. So when you get pullbacks that go, well, here's got no pullbacks. Then you have a very small pullback, 20, 30%, and then down. 20, 30%, and then down. This is a sign of acceleration and urgency. When the pullbacks get to 50%, that's usually one pullback, two for a second leg. And when it gets all the way back to the top third, that's usually channeling or trading range behavior. So what that says to me is we're going to go down to the bottom here, and the market's going to decide whether this is going to be a double bottom or we're going to break out and do a measured move of this range. But I've got to be careful not to do too much in here. If we're going to have a buy signal, breakout pullback, it'll form here with good risk to reward, or we'll have a strong breakout pullback to the other side. But selling here, your stop's miles away. You might have some traders looking at this range, pull back, and then trying to go down here to that breakout point. So if you're trying to construct that one, potentially pull back for a second leg down, maybe 52.85. But I'm just going to trade the ETH charts, the RTH chart. So bear's trying to close it on its low and get follow through or a trend from the open. They've got a big gap down and an open breakout point. But where do you put your stop? Days that have a very large gap, opening gap, can often lead to trading range days. That doesn't mean there's not going to be a big move. There can actually be a big move in both directions. So first buyer of the day, Doji. This is a strong bear channel, and the first time it touches the moving average is usually a pretty good place to sell. But here, anyone that sold there got stuck, and so we've just come back to let them out. Get rid of that. So one's a bear doji, so not a great sell to close, even though it's a gap down. It's great if people share entries and exits, because then it's we kind of all learn from it and see new techniques. Afternoon was definitely better price action. I find the market super interesting because we can both do the exact opposite thing, and if we manage it correctly, we can both make money. Not many other places you can do that. Last week's about 10 points away. We've opened on the Globex low, so I haven't put that on the chart. The Globex high is miles away, so just leave a few magnets off. Some traders will look at yesterday's entire range and say, okay, where does that leave us? And so I've got a measured move down here, 52.62 of that range. It's a little bit biased for me at the moment. I don't like having a whole bunch of targets for one side of the market. Just doesn't make sense to me. Bulls need to get back to that breakout point, so probably going to set up some structure to do that. And if you're a bear and you think the market's going lower, the daily moving average is below, targets are below, why would you sell bar one? Why wouldn't you wait for a couple legs up and then sell heavier when the bulls get out? That's another option. So probably first reversal up is going to be minor, but they can often end a couple of ways. One is strong reversal, break above the highs, test and keep going. The other is a climax below it. Clean the buyer slate. That's a great way to say it. Yeah. All my biggest losses have come from just staying with a bias, just well after it is surely gone, you know. So staying with a bias, just well after it is surely gone, you know. So as soon as 2 closed, traders were selling, but nearly completely overlapping. So not great for stop entries in any direction. Traders buying below 1, 79. It seems like, oh, what an easy way to make 5 points. Except your risk is massive in each direction. And as long as that stop is far away, there's a small chance you can get hit. You know, some days it can just race and hit it. So you've got to factor that one in. Yeah, Temet, I got trapped buying the close of 33. Yep, yeah, easy to do. Easy to do. It looks so strong. So I didn't get trapped on that one because I was long waiting to exit at the open. So in a trading range day, that's pretty common. The strong bars are the ones going to a target. And on a trend day, the strong bars are signal bars. And that's really difficult. Pull back, it's going back to the breakout. This shouldn't have happened, you know, a couple of bull bars up testing a breakout point, but oh dear, huge breakout test. And that's why you've got to get really, really careful with entering in those trading ranges. And if you want the feeling, like the emotional part that goes with it, it's like you're sitting trying to get long, trying to get long, and then finally there's a signal. That's usually the end of something. That buy would have been okay above this. So imagine if this was the high of the day, we break out, pull back, look for a bull bar. If it was up here, that's okay. But it was forgiving, you know, buying below, you had a chance to get back out. But then if you didn't get out there, Gonskis. One thing I'm going to watch is, because it's such a tight bear channel on the ETH, strong bull bars here might not necessarily be the greatest buy to get back to that breakout point. It might just be a test of the top of that channel. So I've got to be careful not to get sucked into what looks like a strong buy when it's actually just a test of resistance. We're about to get our first 15-minute bar. Looking like it's going to be a bear bar, looking like it's going to close on its low. So this is a bear channel on the overnight. The next phase is a trading range. So a 75% chance it breaks out to the upside, 25% chance it breaks to the downside, and if it does that, it will usually do it very, very strongly. And if it does that, it will usually do it very, very strongly. So bear bar on the 15-minute chart and triggers. Immediately finding buyers and coming back to the open. So trading range, price actions. So all overlapping at the moment. So nothing for stop entry traders to do. Range is quite small, 79, 5 or 6 points, so difficult to scout. 4 overlapping bars, drift back to the moving average. This was already on moving average, overlapping bars, back to the moving average. So look at gap downs. overlapping back to moving average, overlapping moving average test, and then go, overlapping back to moving average, overlapping moving average test, and then go, gentle drifting up and back. Tight trading range on the open is very common, so has a few flavors. Here, this was tricky, I thought. Sideways, didn't quite get back to close the gap or the moving average. Not a bear trend from the open. And on the open, we should get, I think our stats, about 80% of opens have at least one reversal and 60% have at least two. If you ever feel like you're missing out on something, you know, the chart's moving up and down, you're not in a position, it can be, I think, helpful to look back at previous days and just see how many points are on offer on an average day. So that's 34 points down, but that's just from top to bottom. All the counter trend moves are about the same. So it's about 70 points plus all the way back up. That's 100 points. There's a lot of points. And all I've got to do is not do dumb stuff. And there's, you know, every bar is asking me to do dumb stuff. But some things are just more clear. This is a trading range, buy low, sell high. This is a strong breakout, wait for a sell signal, bar for a second leg down, 1 or 2. Here's another bear breakout, wait for a sell signal. Here's a sell signal. And it's a shame because if you don't trade the afternoon session, you miss out on it, but there's always the next day. So we've had bull bar trigger above the bull bar. So like I said earlier, we've got 4 overlapping bars and we're far from the moving average. So some traders are going to take a shot at going higher. Could 4 be the buy of the day? We'll have to see the entry bar here. Because all 4 of these are overlapping, I think the chance of this just rocketing up is low without a pullback. This is a bear bar and we triggered below it. So we've actually trapped stop entry bears here, and that means this is probably going to go sideways. This is probably going to go sideways. Yeah, Will said trading objectively and not having a bias is a skill. And it's difficult because you're putting money on the line. So on the one hand, you've got to be convinced enough to take a trade. On the other hand, you've got to be objective enough for the exact opposite to happen, and that's really difficult. So we're in a bear channel on the ETH, and we've got a strong bull bar right up to the top of that channel. So I'm going to wait and see, is there follow through? Are there gaps? If a trader buys the close of 4, they're near a 2-to-1 target here. So low probability trade needs big reward. So low probability trade needs big reward. So we're back down to where this range broke out of, and we're seeing bull bars. So will this be pre-push back to the breakout point and moving average? So if I bought 4, I'm at my 2-to-1 target, so I'm out of that. question will be, is 5 going to get follow through and attract bulls, betting that we're going to go back to the breakout point? So good for bulls, strong bull bar, minute to go, closing far above 1. If it's a good close and gets follow through, possible low of the day. If it's a good close and gets follow through, possible low of the day. Context-wise, this is still a big bear breakout. So bear's still expected to get a second leg sideways to down somewhere in the first couple of hours. So good bar for the bulls. So if you limit order scalping in here, trying to sell above something, what happens when you see this? You need to get out above that. Okay, precog, how do you see OO bars? How do you mean? I mean, it depends where they're sitting. So inside and outside bars are triangles, and in Al's trading methodology, you're looking at breakouts. Do we break above this bar? Do we break below? Do we go and test below the breakout above? An outside bar breaks out of both sides, so we don't have a lot of information. An inside bar doesn't break out of either. And so they usually function as trading ranges, and a trading range is usually a continuation pattern. So the way we go into a trading range is often the way we go out of it. So we come into a trading range, and then that's the way we come out of it. But this is not always the case. We come into a trading range, and then here, we didn't come out the top. We went down. Too many bars. So it kind of resets the probability. Yeah, does that help? You know, in terms of entries, OOs are notorious for traders that stop and reverse. That's how you'll annihilate your account. You know, you buy the breakout and follow through, then you've got a big bear bar, so you get out and try and short, and then reverse outside up, and then what do? You reverse again and get long? Yeah, so that's why I raised those examples about bear channel, strong bull bar, touching the top of that channel. I'm just going to be a little bit patient and see, you know, have we broken out of anything? So you can see a couple of minutes into the bar, we didn't do this. We had huge bar, pause. So we're expecting a small bar. You know, it's rare that you get very large bars, one after the other. You know, big bar, pause. What are the odds we exited trading range the same direction? That is a really good question. I'm not sure. I would say it depends on the leg count of the time frame. So we think inertia, you know, 80% of reversals fail in trends, 80% of breakouts fail in trading ranges. So the more legs, the more likely it's going to stop doing that, go sideways. Yeah, good question. So you can see that's the 2-to-1 target. Those bulls got out, but we need new bulls here to run it up. Otherwise, probably just drift back sideways. Do I trade ETH? No, not too much. I don't do too much pre-market. It's not like I have something against it. It's just that in the past, I overtraded a lot. And that's really heartbreaking because you do a lot of good work in session, and then it's the outside of session where you undo it. And so I just have clear limits on, you know, you come to work, these are the hours, and then outside of that, you can watch but don't touch, you know. But other traders are way more disciplined, you know. And the exception would be high time frame, if I wanted to trade the 60-minute or the daily chart. You know, just take a look at most crypto traders. They look like they haven't slept because crypto's open 24 hours a day, so they're just constantly always trading. How do you maintain your edge? We're human. So bull breakout and a pause bar here. So what happens if we go below 6? Bulls get a second leg up. Maybe, I think anyone that bought got triggered above 5. Still looking like more like a trading range. Bulls really want a strong hourly bar here for a credible double bottom. Probably close enough to that low. But then we've got double bottom here, break, test 97. So if you're trading the 15-minute chart, your target's 94.75. Sorry, just that. 95 flats. Just that. 95 flats. It's becoming difficult for bears. Bears triggered a bear bar here, went up. Bears tried to scale in 1 time, so those bears are stuck. So it's a bad high 1 above 6. Bulls want a bull bar here. Maybe a test below, find buyers, and then go above it. Bulls want a bull bar here. Maybe a test below, find buyers, and then go above it. So if this is going to be a trend, that's why I've helpfully put the name on the gap. We'll have open gaps. And if this is going to be a trading range, these gaps will close. Tom, if 7 is a small bull bar gap open, good for a scalp. Talk to me about the scalp. Where's your stop? Where's your exit? The best scalps have immediate directional probability, right? And the better ones have already got context going for them. So here is a bear spike. This is low probability in a trading range. Once this happens and you're below both moving averages, then selling above here, sell higher, scalp. They're the best scalps. It forces the other side of the equation to take the other side. Stop below 7, 1 times bar 7, and room before breakout. Right. So what I would say is, if this makes a double bottom and then we go above it, then yes. We've actually had a few days like that. Yes, here's a good example. So this buy worked, but usually you have consecutive bear bars. Buying above a bull bar here is not a good idea, but this one worked and actually got a new high. So once you see that and you see these bear bars, then buy scalp. You can buy the bear bar, you can buy this bar for a scalp up, and then instead of trying to sell, I was really happy with my trade here. That's what I'm trying to show off. This is strong, so any bears that sold are stuck, so you buy and then buy the pullback for a second leg up. So you have that immediate probability of someone stuck and they need to get out. So another bull bar, not a great buy signal, closing on its low, near its low. Again, another way you can do it is look at the traders you think are stuck on 3. So you sell the close, and then 1 or 2 times higher. At some point you've got to get out of that trade. Now, at the moment they're not stopped out for that trade. Now, at the moment they're not stopped out. If we close above that point, they'll need to they'll need to go. So only 12-point opening range at the moment. And from yesterday's close to here, it's about 40 points. Days have been a little bit bigger than that, 50, 60 points. So if you sold there and sold there, your average price is that middle blue line. And you're probably okay below both moving averages with a gap down. Aren't you glad we didn't buy above 5? You're probably like, what's he doing? He's missing out. It's the low of the day, rocket ship to the moon. It's all overlapping. So we've got an outside bar on the 15-minute chart and went above it. So still trading range behavior, still in that tight bear channel. On the ETH hourly chart, it was bull bar, which we triggered. Didn't close on its high, but still one reversal. Probably not enough to reverse this, but will be the start probably of a progression of number of reversals down to the low of last week's. So second attempt by the bears to reverse it. The doji, not a great sell below. And the bull's going to try and get that second leg up. Four bars overlapping, breakout. 4 bars overlapping, will 9 be the breakout? Will that be today's rhythm? Big round numbers, 5,300, sure. Yeah. Thanks for pointing that out. That's always good to have on the chart. And also the round numbers, around that, 25, 50, 75, they actually work quite well if you try and weave them into how you trade. I was told that's based because people are lazy with their ordering, so it's easy for people to remember, but I don't know the actual reason. So, yeah, well spotted, Pierre. Yeah, that's the failed low 2. Yeah, it's the second attempt that fails. I'm just waiting. I want to see these bears give up. If this was with a little bit more structure, then I'd be all about it. Like, failed lows 2s. After a lot of down moves, the market doesn't usually just keep giving you chances to have another low 2. Like the move's already gone down. Now you come back and you're like, oh yeah, look, now I can sell, and then that's the bottom. How many low 2s do you need before you sell? It's not usually like that. So. Ed's saying, do you think it's reasonable to expect the market to fill the gap between Thursday and Friday? Where is Thursday and Friday? Because we're Wednesday, that's Tuesday, Monday's a holiday. So these two. Yeah, this is the breakout point. Yeah. That's why I got on my still on my chart. Where'd it go? Sorry, I thought that was yeah, well spotted. That's meant to be on there for the breakout point. I was just lazy to mark it up. Because if you imagine, because the market's fractal, so you imagine this is all one bar. We're trading a 5-minute chart. This is a 1-second chart. We have a bear breakout, so we've got a strong bear bar, and we're pulling back to what it broke out of. So a really strong trend will just never give you a chance to get in. And that's really common on the open as a reversal and in a leg 3. So I think the easiest mistake to make with limit orders is we have a spike, this is the sell, you miss that, then you have another spike, and then you try and start selling above these. But this is the late leg, and more likely we're going to turn into a trading range or reverse. So here's the spike, and then limit order buys, and then by the time we get down to here, no more. So can the bulls get this second 15-minute bar closing above the last one? Oh, I think they closed at the high. Okay, so that's better for bulls. We've got consecutive bull bars, and we're probably going to go above that. Consecutive bull bars, and we're probably going to go above that. What's that close? That close is 89.25. The high is, okay, the same price. So high 2 above 9 with a target 5 points above. It's not the kind of very strong trend that's rocketing anywhere too fast. So I think it doesn't hurt to be patient and buy below something. Yeah, exactly. Let's get the encyclopedia. This is Al's homework, by the way, every day for the past 4 decades. So there's an idea on how you become very good at trading. We need to do lots of homework. Big gap down. So a couple of legs pulling back to the moving average, to a new low of the day. Here, wedge. So we're looking at these at the moment, the pull back to the moving average. Did we get a new high? We've got an equal high. Okay, there's a new high. So that's the final scaling for those bears. You sell there, sell again, that's your average. Sell again now, that's your average. You've got to double your size. It's for academic purposes. I'm not encouraging people to trade this way. Because you tend to take small winners and big losers. On the ETH hourly, there's actually a bear outside bar here. So we're 4 minutes into the bar. Bulls need a close over 9. Okay, Andrew. Yeah, the gap's good. The bulls need that. Because the way I think some bulls will look at it is they want a reason to buy, but they want a reasonable place to scale in, and open gaps are really good for that. Thanks, Tom. Yeah, so we're coming up to the close of the hour, and bulls want a really good signal bar here. So consecutive bull bars, but not a good close above 9. So we're still in what looks like a leg in a trading range. So it's not buy the close or buy above, more like buy below. Looks like the bears are still selling above, but that's going to be difficult as we go above this bar. So what happened here? Your traders bought the pullback for a 1-to-1, probably taking profits. It's not a sell signal, right? It's not a sell signal, right? traders are concerned that we're going up, but we're not closing above the highs of prior bars. So in a bull channel, you're buying lower, and you're taking profits at the top of that channel. So you're selling, you're taking some off, selling again, taking some off, knowing that eventually the music will stop. Your consecutive bull bars on the 15-minute chart, so probably buyers below this bar somewhere, but a lot of the bulls not willing to hold long without the urgency. If it's going to be a trading range, better to be long below the midpoint. Can the bears close this gap? So if traders are exiting at 10 points, probably expecting more of a trading range. So if you bought that big bar on 5, at best you could have made 3 points. But if you've waited to buy below 7, then you could get your 5 points. That's a really good example of how to trade a channel. You see the information and then structure the trade. So bulls, double bottom. Yeah, you got it? Yeah, nice. So that was the tested support. So I bought under 8. That's why the gap's really good. Interestingly enough, those bears got back to their entry. See that? Isn't that fascinating? Pretty scary to keep scaling in. That's why I don't do it. Nice. So if you wait, that's the breakout you want. Pull back, second attempt, can't reverse. Looking, we're in a channel, buy below. Then you can take some off of the new high. You can run part of it to the breakout point. Ah, beautiful, Ray. I was just thinking of you, mate. I thought, oh, mate, Ray likes that trade. For other traders who might have missed that, you're looking for bars that are bad stop entries. This is a bad stop entry below. This is a bad stop entry. This is just places that are not great to initiate a position short, and that means that they're advantageous to initiate a position long usually, particularly if they're in the bottom 50% of a range. So we've still got a body gap open. So that's good for bulls, but I mean the target's up here, the breakout point. So I think okay to take some off at the top of the channel, okay to leave some running for targets, but you know, trading ranges are disappointing. There's enough like very clear trend parts of the day. They have trendiness, as Ali says, which is pretty funny. They have trendiness. Trendiness. Channels are just really good to take some off at streams. Could have got 10, coulda, woulda, shouldas. Yeah, mate, don't worry about that. Don't worry about those coulda, woulda, shouldas, mate. Just as Rose would say, mate, pay yourself. That's great advice, but like rarely do anyone say it. Swing trading is very challenging because you have to sit through pullbacks, and if you're watching the screen, brains work pretty quickly. You give yourself a million reasons to get in or out of that trade. Yeah, sure, Matt. So now, can I call the trades out before I take them? Yeah, I can, but my concern is I don't know how much people are trading with or what percentage of their account they're using, and if I just call out trades and then people don't manage them, then they can kind of blame me for that. Like I'm not telling them where to get out or enter. So, I'll be open about what I'm trading, but also I want people to have a chance to to see the trade before I say it. I think that's fair. So we're sideways on the open, far away from the moving average. So not clearly up, not clearly down. So that's why I'm saying first thing to see is we're probably going to drift back to a magnet. Matt, I know, well, you think obviously, but we get messages, you know, and some of the presenters have pretty nasty messages saying, you know, you never told me when to get out of the trade, you know. It's like, I never told you to get in the trade. How come I'm managing your money? Where's my fee? So sideways bars on the open. So we're expecting a drift back somewhere to the moving average. Bulls get a surprise breakout. So now I know directionally, this probably needs a second leg. Bears will have usually 2 chances to reverse this. 1 chance, no good. 2 chance, no good. Now I'm looking to buy, but I don't want to buy high. I'm looking to buy below something. You can buy below that bull bar, that's fine. I think it's a little bit aggressive on a gap down, but it worked. So I measured that the bears, because it's a trading range, are going to scale in until they're obviously wrong. So that's why I kept that chart up there. So I want to see them get triggered in, and we saw them get triggered in. So this is a channel. So now I know it's a channel. That's my market structure. Now I know where I think we're going, which is back to that. That's kind of my range. It's really this. And that's where I want to enter, somewhere in the middle there, somewhere between the open, that gap. And then, oh, just ruined it, didn't I? I don't want to buy high, I want to buy below something. So buying below the bull bar, buying anywhere in this gap. So you've got small risk for potentially big reward, and then you can get out at the top of that channel. So this is the second leg from this, but they kind of all piece together, if that makes sense. And so if you don't get one of them, for example, say we all got long there and this was a bear bar closing on its low, I would usually exit 1 tick below it because it's not doing the thing that I thought it was doing. Did that help? So the logic is bears are short because it's okay to be short. Now they're dealing with something they don't want to deal with. So they're going to have to sell higher and they're going to become buyers in this area. And I'm basically taking the other side of that trade. Sometimes it doesn't work because you get a reversal. And that reversal keeps going lower. So you need a clear idea of where that's going to, where you get out. Yeah, nice. It's a bit if then, you know, if this, then that. But it's always like that. So I encourage people to trade the George Costanza, what I call the George Costanza way of trading. You know, assume stuff won't work. You know, wait for someone to make a mistake. You know. Close. Yeah, I'm not too fussed with the one-to-one off the spike. I'm more trading the probability. So I'm saying you're right. It probably is going to go one-to-one up to that target. But I'm saying this needs a second leg. Bears are stuck. I want to be long, but I don't want to be long up here because I'll struggle to get 5 points. That's the current range I'm in. And then once we pull back below that 50%, now you've got bears who've got the same problem I just had. They want to sell, they just don't want to sell down here. So they're not going to do that usually. Can't stand you. Does that make sense? So now that trade's finished, and now you've got a new trade. You've got a pull back to the range. We're still going to that magnet. So, but price action is like very accurate. So you can use one-to-ones, two-to-ones very well. Noob, your question is, I know what you mean. If you wait, So think time. Time means you get more information, which means your probability is increasing, which means your risk is increasing, which means your reward is decreasing. As opposed to the person that bought this bull bar here, which is not easy to do. So they get the upside. But the more bars you wait, and I think what's really common is traders buy late and then they draw like this imaginary 2-to-1 target from where they got in, but the market doesn't care about that. The market's going off the start of the move. Or it's going off the range, not where you decide to get in. In fact, do people get that? You know what I mean? Like just because you bought this bar doesn't mean you get 2-to-1. If you bought this bar under the moving average, bear spike, this is a low probability trade. You get 2-to-1. This guy gets 2-to-1. And even this guy gets 2-to-1. I mean, it's a pretty rubbish bull bar, but not, I bet you not the next one though. I bet you this one doesn't. No, I tell a lie, he did. Just. So you wait for clarity, for certainty, then that could be the end of the move. So yeah, if you're just trade smaller and get in earlier, try that. Okay, Roy, yes. Yeah. It's okay, so we're back at the breakout point, which was where I think the market needed to go. This is a lot of bull bars now, 1, 2, 3, 4, 5 bull bars, but still under the moving average. So usually with a gap down, you get, the bears get an attempt to do something, starting sometime in the first 2 hours, and we've had 1 hour, which was a strong bull bar, and we've just gone above it. Credible double bottom, low in a trading range. Only thing I don't like about it is we just broke out of a double bottom. So I don't think that's super clear. That makes sense. 15-minute bulls have got strong move so far. So this probably needs a second leg. Now you can argue this is the second leg, 1, pause 2, but no bear bars as yet. Ray, my hit rate for second trades is lower than my first trade. Yeah, the I know what's going on. I know what you mean. My one that has taken a long time to get rid of is taking a great scalp and then going back to sitting patiently, but then the move keeps going and somehow convincing yourself there's another scalp in it. It's almost like my hand just like reaches for the mouse. It's quite crazy. It's quite crazy. But if you took a high probability trade earlier and now you've waited 3 or 4 bars, it's not still going to be high probability. Yeah, it helps just not to touch the mouse, like just literally have your hand off the mouse. Stops accidental clicking. Steve, when does this turn into a bull channel buy for any reason? Look, for me, it's that's why I didn't talk about always in, because I don't like to talk about always in when we're always in long when we're below the moving average. Because on a gap down, this is a bear breakout, so this is a pullback. So if it's a bear breakout, it's not suddenly always in long. Now, you can say context-wise, hey, look, we've got an open gap. We're going to the moving average, many bull bars. This is always in long. But that's within the frame of this is what we broke out of. So buy for any reason, I don't think so now. We're at the moving average. We're back at magnets. If we go sideways and get another bull breakout, then yes. Because now, if that makes sense. Wait for the bar 24 or so after magnets. Yeah, I think it's like you that's a really good question. What's a easy way to say it? This should have gone up, right? Look at this chart. This is very strong. We just broke out above all these highs. We've run stops on the bears. Like, we're going to go above it. But we don't. We actually break below it. So everyone who bought here and scaled in lower is now back saying, oh, thanks so much. Didn't lose so much on that first position. I made some on the second position. So this is a potential sell zone. And so I want to let the market do that if it's going to happen. Like, I don't know if people have done that. And then go back to breakout mode. When the repay, what's the repay mode? I like what you're saying here. Look left. It's like there's a flow on from whatever just happened, and you want to let that play out. Like, for example, here's a bear breakout. Now you can try and buy against this, but now that we've just had 3 bear bars below the moving average to a new low of the day, good chance this is going to have a second piece to it. And if that second piece happens at the moving average, that's probably going to go a little bit further. Now that we're far away from the moving average, no one wants to sell all the way down here with a stop there. So we drift back up. And then are we going to find more sellers? We don't find any more sellers. Actually, we have a bull breakout. And then once this breakout mode's finished, we get a breakout pullback, and then that's the next piece here. I think Rose is better at explaining this stuff. Like here, because this is a bear breakout, I'm waiting for the bears to set up a sell signal. I kind of shot it, turning this down. Like, now that we're back at the moving average and the magnets, I don't want to be long anymore. Swami Tim. It's the vibes. So tight bull channel. So 15 bears really want a good signal bar here, but they might need 2 of them. They might need 15 to trigger, and then sideways, and then the next one. It's just not a good looking sell with so many bull bars on the 15-minute chart. You can see tails now, so might go a little bit more sideways. So inside bar, so I think Ed was talking about leg count in there. How do you count it? 1, pause, 2, pause, and then 1 more, or you say breakout 1, 2, and is this 3? This outside bar is a bit confusing for the leg count. So I call 1 reversal, 2 reversal, and then we trigger it. So that's a 3rd reversal now. I do it that way, just for simplicity. So we triggered the hourly bar. Good for bulls. It's in the right location. Can you argue it's not low enough for the double bottom? I think in the scheme of things, that's a pretty good signal bar, but probably more likely to go up and sideways. Not a great stop entry sell above that bar. I think the open's a really good time to trade because you've got quite clear magnets, and you're trying to really trying to guess which one's more likely and do it fast enough with the least amount of risk. You don't get a lot of time. Here, sideways, and then just straight to the moving average. here sideways, you have a shot at the moving average in the gap close. I got out break even here and then bull bar to a new high. Okay, well I don't want to be short anymore. And then I don't want to buy anything here until we test some kind of support, test back to the open. Very similar shapes. If you find you're not taking a trade till you get here, you know, 1, 2, 3, 4, 5, 7 bull bars into the bull trend, that's okay. I'd say the issue is time for probability. You want more evidence so it becomes more likely. That's okay, but you need to keep shrinking your target. Better to have a shot at, I think we're going to go up to the moving average, or the opposite. I think we're going down to the low of last week. And you're looking for a reason, looking for a sell signal to do that, which you never got. And for the intermediate traders, if you can see one side's not getting what they need, that's usually a good chance to do the exact opposite, which is that failed low 2 idea. Do you think we'll hit 53? I mean, we're so close to it. Yes, I do. Will we then go to the low of last week? That is an interesting question. I would need to see more selling. I mean, maybe the bears are all waiting for the pullback to 53 to do it. There was one of these funny days, I think it was last week, the week before last, where it just kept going and just hit all the targets. This is a possible. Gap down consecutive bull bars. Well, that's not a great sell. Okay, so it's probably buy or buy a pullback. Buy a pullback. Oh, we'll go to the moving average. Okay, now we'll go and close the gap. So we just did 1, 2, 3, all the way up to close that gap. Bears never showed up. Not that one. Sideways, back to the moving average. Not that one. This one. Big gap down. Sell signal triggers, another sell signal. Okay, well, you're selling or you're flat. Couple of points down and then strong reversal to a new high. Oh, okay, that shouldn't happen in the bear trend. So traders not selling below, they're selling into the bar, trying to get back down to those last sells. And then, okay, we'll go back and hit the moving average. Okay, we'll probably create a wedge. Oh, it didn't work. Maybe this is the wedge. Oh, maybe this is the wedge. Oh, this is definitely the wedge. Oh, no, that's not the wedge. Closing the gap. And then I wasn't trading late into here, but I mean later it just annihilated anyone scaling in. So don't trade these wedges. This is a bad wedge to trade. So don't trade these wedges. This is a bad wedge to trade. If you think you'd see a wedge, you're also looking at a channel. And potentially a tight one. Like right now you can say, oh, it's a possible wedge. It's also a tight channel. So first reversal probably minor. Hitting with some other trader issues. There's a lot to deal with. Also you'll be able to read price action live. You know, hitting wrong buttons, wrong sizes. Trading micros versus minis, minis versus micros. Wrong stop, no stop. Yeah, so we discussed holding bad trades too long, so I suggested pick a lower time frame chart. So my rule is if I'm short and there's a bull bar that closes above a bull bar, so say I'm short in here, this bull bar closed above that bull bar, so that is a breakout. We go above That bar, that's a breakout and follow through. I've got to be out of that short trade. If I'm long, this is a bear bar closing below a bear bar. We go below that bar, I'm out. And you can say, oh no, but then it worked. But that's the best I got. It stops me doing that. Binary decisions. Yeah, Brad's got a really cool flow chart. That's great. That's like summarizes so much information so clearly. Is the channel tight or broad? I'm not sure. Okay, let's assume it's tight. Is it a breakout or you're not sure? Okay, wait. Yeah, exit on breakout and follow through on lower time frame. Yeah, try that, mate. Yeah, it's up to you, Matt. I mean, trading's very personal, so you've got to find a system that works for you. So yeah, and I agree with both Al and Tim, because the more charts you have, the more confusing it is. But also, the better you get at trading, the more you're able to have all those time frames sitting there, and they all fold into one another. What I'm talking about here is just a very quick system to decide whether my trade's working or not. So so test it out. If having the ETH and RTH on the same screen is confusing, which it usually is for me, I don't do that. I just look at one. If having multiple time frames makes you hesitate, just put one on the screen. And then the more you trade, the better you get at it. Does that make sense? So that's a trade management thing. Like let's say you're short in here. Okay, let's do this here. Okay, so I sell here. So per contract, $300, great entry bar, pretty happy about it. Get a follow through bar, I'm thinking this is a fantastic trade. Now I have a reversal bar here. So I'm using a lower time frame to decide whether my trade's working or not. Get a follow through bar, I'm thinking this is a fantastic trade. Now I have a reversal bar here. So I'm using a lower time frame to decide whether my trade's working or not. So these 15 minutes worth of bars here, now I've got consecutive bars against me. So if we go above this bar, I think I can actually put so my stop is now one tick above that bar, which would be here. Does it get triggered? I did on that bar, but it didn't there. See, I didn't go above there. So I'm still in that trade. Anyway, not great for swing trading, because swing trading you're holding through pullbacks, but yeah, here we go. So second entry sell on 17. At the moving average, this is where we thought the bears would do something. It's got a tail, so it's not clearly bearish yet. 18 might be what the bears need. We're not collapsing away from it. We're doing more of this. Both those traders you mentioned also use other time frames to get the context of their trade. So they're looking at the 60-minute chart, looking at the 15-minute chart, and then trading one time frame. And I think that's excellent. Like if you're taking the 5-minute trade, then focus on that chart for sure. Is bar 17 a failed high one? Yep, it's definitely a high one. Might be a bit early for me to say it's failed. It's triggered, so it triggered above and it's triggered below. So if you look at a high one here, new high pullback below the low of a bar. So that makes 18 a high 2. It's kind of sitting below the moving average, so I think okay just to wait and then see what happens here. I prefer to see the bulls break out above here and buy. There's a danger that we come back into this range. Danger that we come back into this range. Charles, great question. That's you bang on. Can I speak to this confusion? Yeah, trading range channels. So is it a bear breakout and a pullback for a second leg down, or is it a failed breakout and we're in a bull move? And you can tell by the overlapping and the tails that it can be both. So in terms of the confusion, I'm looking to buy low and sell high, or I'm waiting for a breakout follow through pullback. So that was the bottom of a trading range I was looking to buy. Now, had that broken below, then I would have just got stopped out and I'm wrong. Now we're at the moving average. This is the range, and we're at the top part of that range. So potentially some kind of sell, which I'm waiting for if it sets up, bearing in mind this is all pretty strong on the 15-minute chart, or I wait for the bears to fail at something and then buy. Oh, good, yeah, man, it's good to read other stuff. Absolutely. Particularly because it's psychology and you've got all Al's price action methodology there to interpret it. Yeah, it's great. So are the bears going to show up for this sell? Gap downs usually have a bear swing. This is a reasonable place for it to start. Not a good signal bar, inside bar. The swing point's a bull bar, not good. And tails below bar is also not great. So just as here wasn't buy above, it's probably not sell below either. So below bar is also not great. So just as here wasn't buy above, it's probably not sell below either. So Charles, I just love that question. Can you speak to this confusion? Mate, that's 90% of the chart. You know what I mean? Like brief moments of clarity and then back in the grey fog. Oh, nice. That's a good idea. Yeah. Yeah, the meditation's great. Anything to keep the body and the mind calm and relaxed and not thinking to the point of exhaustion. Very good. So the bears have gone below 1 bar, 2 bar. Will they go below 19? So bears had a couple of attempts to reverse it. Kind of 1, 2, 3, little bit of a wedge bear flag, I suppose, in hindsight. So is this another flag or move up? I'm a bit stuck here because I'm flat. Well, I'm not stuck, I'm flat, but you know, it's a 10-point stop, 8-point stop, and it's a bit unclear what's happening above it. Whereas the bears have got a bit of an easier trade. It's a very small stop and chance to just kind of float back into this range. Pretty excited for Orlando, for those that are coming, for those that are not. Hopefully you can get there next time. We've got bigger screens. where we've got the charts on a, we're kind of streaming the charts as well, so you can pull it up on your laptops. We've got a bazillion power outlets because last time they didn't have enough power outlets for everyone, so everyone's like hovered in corners of the room trying to charge stuff. It should be, Tom. Tag Richard. Tell him. So I'm disappointed, Richard. How come it's not every year? No, it takes a lot to organise. They're putting in a lot of time. No, it's Tim Stout that's presenting. You'll be in the middle of his preso. You should. You need to hack the Wi-Fi. This transmission is brought to you by Rose. It's from Jersey. So we've gone below the third bear bar here. 91, a couple of points below. So, you know, if you're a bull and you want to go up here and you're still long, at some point one of these bear bars was your time to get out, I think. Oh, there's a hacker crew now. That's awesome. So we've triggered the sell. Now, that's awesome. So we've triggered the sell. Because this is sideways, I'm expecting this goes sideways up. This will probably also be a leg in a trading range. So basically a wedge back to the EMA. So the bears want something like this, a little bit of a leg sideways, and then bigger leg down. Bulls want this to fail, and this is what I was talking about. We break above it, test, and then get the leg up. We're not doing any of this stuff, not doing any of that stuff. Something more like that stuff. Something more like that. So more and more bulls giving up, and bears happy trying to take a short. Oh, yeah, Skip. That's ridiculous, that show. Oh dear. I don't think people actually have ever watched Skippy the Bush Kangaroo or realised how popular it was in Australia. Literally, the kangaroo can not only communicate with humans, it also solves crime. So bear breakout on 20. So 21's important. Is this going to be a three-leg move? Other bears selling. I've just put the 2-to-1 off 19, but magnets are back to this gap and the open. So I think the open's super important for us day traders, because for the bears to turn this into a bear day, first stop needs to be back to the open and then get more signals here. So at the moment, more likely trading range down the bottom here, a couple legs down. Yeah, it's on Irish TV because the strong Irish community in Australia, mostly in Sydney. I used to play soccer with a lot of them. They're pretty good at soccer. They're more interested in the beers afterwards, but they still always turn up and play. It was tough because the soccer teams would always be sponsored by like the roughest Irish pubs. And as long as you walked in with the Irish boys, you're okay. You know, you walk in, you're like, is there a fight going on? I was like, no, it's just us having a good time. I literally had that haircut. So consecutive bear bars below the moving average. So now we're always in short, probably going to get a pullback This is a tight bull channel. Got a couple of legs up, and this is a bit of a surprise, but yeah, middle of a trading range. So bulls exited, some limit order bears. They didn't really get to sell above a bear bar, so I think they just sold during, week high to 18, never triggered. Would have been better for the bears if they had gone a tick above. Skiffy thing's amazing. Thanks, Rose. See if you can watch more than 3 minutes of an episode. It's hilarious. How do I estimate the seller's range? Well, I'm looking at, it's a good question. I'm looking at this breakout point, and then I'm trying to pick up basically the top half of that bar, including above it. So now 3 bear bars, so we potentially have other sellers there somewhere in this range now. See how it rushes on the way up, it's difficult for limit order traders to get in, and now on the way down it's difficult for them to get in as well. So trading range price action. This is kind of expected based on the open. I'm not seeing the measured move down here potentially, or maybe to these magnets. But quite a lot of bull bars here for this measured move down. Skippy was the flipper. Oh, flipper. Oh, that's right. Strong bear bar on the 15-minute chart. So that line corresponds to the break of this tight channel. Get rid of these flags. So nothing for bulls to buy here yet. We've got testing the 11 low and the open just a bit below. I wanted a little pullback to get short, but I'm yet to see one. I prefer not to sell in the bottom third of the trading range. But that's what happens, you know. Looks bullish at the top, looks bearish down the bottom. You can see this is a little bit more consistent than this. So, if it's solving crimes. Strong enough breakout and follow through. This should have a second piece to it. Bit tough for 15-minute bears to sell here, so they're probably going to want to pull back to sell. Oh, g'day, Ari. Oh, you asked the question earlier. When am I getting there? Friday. Friday night for the meet and greet. Is there a bear gap from 19 close to 21 high? Yeah, sure. Well, you've got the body gap and you've got the tail gap, so somewhere in there for sure. I like to look at kind of the last bull signal, you know, from the move before, and that line. So I put the line under 18. Similar logic to what we did with 3. You know, can a trader just keep scaling in and get out? Can 22 be a double bottom? It's a bit confusing. It's in the middle of a trading range after 3 strong bear bars, so I think still low probability. if this works with that gap still open, that's a problem for bears. I still think the bears will get some kind of second leg. S score D, does it mean anything that we're at 61% retracement of the move up? Yeah, I think so. I think anything in the bottom third or below the bottom half in this zone is the buy zone of a trading range. So sometimes it'll, stop to the tick. Sometimes it kind of goes in pretty deep. Let's get an example. So you've got a bull leg, pulling back, pulling back, pulling back, and then drops into that bottom third and then shoots back out again. So back at the breakout points, we've got the end of the second hour. So we've got a strong bull bar, broke above. Bears needed to close around here or a little bit lower to keep the sell on. So important bar for the next 5 minutes. I don't think it's a great buy location, really. We're still under the moving average, middle of a trading range. I think it's a better buy down here. Bulls might be trying to do a couple-legged pullback for a target maybe up there. So any bulls that bought under that bar on the 15-minute chart, buy lower, it's probably an exit area. Some bulls are going to wait for this to close and look at it as a pullback and then a chance to buy for a test of the highs. And look at it as a pullback and then a chance to buy for a test of the highs. I'm still giving 51% to the bears because we're below both moving averages. So we'll probably, if the bulls don't get a strong close kind of back above the moving average, we're probably going to drop back to the 21-22 low kind of area. 122 low kind of area. Bulls really shouldn't have let this happen. It's not clearly trending. It's usually better to just trade a half size and expect your first entry to fail. Whatever you think looks good or you think looks like a good entry, it probably fail, and it's the scale in that'll make money. Yeah, nice, just play the trading range. Well, this is the breakout, so probability is this should have a second piece. So if this suddenly turns very bullish, then that's a big surprise, and then you take a loss on the short, but then you've got a really good chance on the long trade. For example, even though this is a late leg and climactic, you take a loss on the short trade somewhere in here, but then so strong, likely you're going to get a second leg up. This should have a second leg down, doesn't, we'll take a loss, draw a line where you took that loss, and then often you get a chance to make it back and then profit. So bear bar on the hourly chart and 24, bear bar at the moving average. So sellers below that, but also, you got two bull bars here, so probably more sideways to down, I think. Al talks about this a lot, about double bottoms, whether a double bottom's tested or not. And it's a good practice to go and look at different double bottoms like in a trading range. Is this the double bottom? Is this the double bottom? Where's it testing? What's the range it's coming out of? So bears is like a second leg down on the 15-minute chart. but better to enter at the extremes if you can. And you'll know if you've entered in the middle of the trading range because on your entry bar, it'll go 2 points ahead, 2 points behind, 2 points ahead, 2 points behind. You'll be so dizzy after 5 to 10 minutes, you probably exit for nothing. At least that's my experience of it. There we go. Let's pay for the trading room for a couple of months. There we go. So it's the same trade. I'd love to say my game is so varied, but it's not. It's literally just the same thing over and over again. It's just being patient, wait for it to set up. So bull breakout, pull back to the breakout point, and then scalp up. Breakout, pull back to the breakout point, scalp down. So you don't need a lot of setups. Yeah, beautiful. Hey, Ray, I knew you were on it before you wrote. I knew it's classic one. But you need a few things in your favor. You need someone to fail. So bulls failed up here, surprise. And then limit order traders who never want to be wrong just keep scaling in, and they get back to a point where they're neutral, and that's usually where that area is. And if on an average day the bars are 4 to 5 points, so it's good for 4 to 5 points. But if you can't wait 2 hours for your 2 trades, then get up market replay and literally take 50 trades on market replay. Just click like a machine gun. Get lots of trades out of the way. And then when you get the real money account, that's more of a sniper thing. Kind of like, I think it helps to like listen to Al. See how Al basically just brushes 90% of the bars. He's like, yeah, maybe, nah, it's okay, it's not great. And he's, and you think, oh, how come he just turns everything down? That's why he's so good at it. We got to watch him live the other day because we're kind of practicing for the seminar. So him and Ali are going to trade, and I think Brad and I might do some commentary, and then they'll do some commentary. And but yeah, he's just so fussy about what he wants to see. He's like, no, that body's too big, that tail's too small, blah blah blah. And but his hit rate's unreal. You know what I mean? Like his read's unreal. So if you're finding a reason to trade on 80 out of 81 bars, try the opposite maybe. So bear's got a scalp. Looks like bulls took the scalp. We're probably going to do a bit of sideways action here. Could be two-legged pullback to the moving average for a low 2, but it's a little bit less clear now. It's like everyone was happy to sell high. No one wants to sell here. They're happy to sell here very quickly, and then they're out. Oh, nice. Sorry, you took the short scalp. Yeah, it should. Well, if you go and measure 5 points and 1 tick, you'll find some pretty interesting things on ES. So and that's good. So you can either sell above that bar. Sometimes, because it's such a strong stop entry trade, you can sometimes wait for tails, but the context is good because we just broke out of that area. So this is not a whole lot of bulls buying because it's the trade of the day. This is more like bulls buying there, scaling in betting this is going to be a minor reversal, and they get back. I'd recommend whatever your setup is, create like a little manual of 50 to 100 little screenshots of all the different kinds. Gap down ones, gap up ones, no gap ones, gaps where you're below both moving averages, above both, in between. Trend days, trading range days, channels, sideways, expanding triangles, contrasting triangles, like until you got a really good feel for how they should work. So that when they don't work, it takes about 3 seconds to shut it down. Yeah, it's a good question to hear. So my logic is this. This bull bar here is not a great signal bar. It's got a tail. It's probably the smallest bull bar all day. It's also in the middle of a trading range. So this is not a great buy signal. But this here, great. And then it gets the strongest bull bar all day. So for me, that says that's bears getting out and buying as opposed to bulls. It's also a test back to this gap. We broke out, that's one test, that's two tests. And the bears left a gap open here, so that's fair enough. But I just don't think that buy there and this makes sense to me. So when I see a bar that's like too strong in the wrong place, like this one makes sense. Anyway, that's my read. Yeah, it's the best bull bar all day. Closing on a tie, not too big, not too small. You know, this is too big to find buyers. This is mostly tail. So I know it's probably not the explanation you want, right? Because you're like, I thought we're looking for a good signal bar. Like, best bull bar all day. Suspicious. Really good bar, but too big. Okay, we pull back into it to go up. Really good bull bar, suspicious. Finishes at the moving average. Really good bull bar after a bear spike. So this is a similar one. It's like, is it bears just moving their orders further up, or is it actual bulls like, I just can't wait to buy? And so that's the sell. So you wait for 56. I'd usually wait for 57 to print, because just in case this, if that's really strong, and then when it's a bear doji, no more buying. So, oh, thanks, Ray. we get sprinkled in. You know what I mean? We get sprinkled in because like Rose takes care of everyone most days of the week. She's giving people points left, right, and center. Traders that bought 23 had a chance to exit where they bought. So buy below, exit. Sell above, exit. So triangle behavior right in the middle. Thanks, guys. Trying to put the team together. It's a very slow process learning trading on your own. Far out. And expensive. Good. So bulls want this to be high, low, double bottom. Open gap, but we're still below the moving average. So this is a bit of a problem. Bulls need to get up here. What happens if 27 is a bear bar? What's going to happen to all those bulls? Bulls would like to go above this 15-minute bar here, because this is breakout and follow through for the bulls, pull back, and then high one. Oh, tricky. Inside bar, closing above its midpoint, which is bullish, but a bear bar. So just what you'd expect in the middle of the trading range. I think best choice is flat. Sometimes I get into a trade and then I end up in breakout mode. I usually just jump out, take the lost couple of points and just forget about it. Kind of sends me a bit crazy with the up and down. I'm still in it. Hi Mahmood. What's happening from 21 to 27 is what's happening yesterday from bar 43 to 51. Yes, well spotted. Yeah, it's a bit of a transition point. And we're just missing this bit because it's in the gap. but we transition below the moving average, pull back, possible second buy signal, doesn't work, oh dear, bulls will scale in. Who asked that question? To hear you asked about that question before, and that's why we pointed this out. Okay, we scale in, and then you get out at your break-even point, and once everyone gets out, second leg down. So you can just watch it and then wait for a sell signal in the right spot, and if you get it, yeah, no worries. But yeah, well spotted. Same, and if you can get that kind of mindset that the patterns repeat, they just repeat in different orders, and you know, different open, where's the moving average, which bit's stronger. But the key for today's read, I think, is big gap down. Let the bears have a bear swing at some point in the first couple of hours. So it didn't start here. Okay, well, they don't get it. We're probably going back to the moving average. Yep, we did that. And then we said, let's wait for the bears to do something. Okay, they got a bear bar and triggered it. Okay, second entry sell, scalp. And now we're trying to decide what the next move is. So breakout mode's like, you know, no one really knows whether we're going up and down. We might be waiting for a higher time frame to print. There might be traders who are trying to get out break even. Someone's going to get disappointed. Bears are okay because their stop's up here. Bulls have got to stop down here. At some point in this triangle, someone's stop is going to get hit. No idea. That's right. And triangles can go on for hours, which is really annoying. If you happen to get one of those sessions, which turn up every few months, because no one's stop gets hit. No one has to scale in. Everyone's just sitting around waiting. Trading range, making you buy in the top third up here, looking like it's going to make you sell in the bottom third. So ETH chart, type bear channel. Oh yeah, so we got a few things right. The bulls got a signal, rushed up to the top of the channel, sold off. Okay, so that was a good. That was good. We covered the channel, tested the breakout point. So I mean, same deal on a higher time frame. You know, we're learning the 5-minute chart. That's just to put you under pressure, so that all the other time frames are much easier. Hourly chart, their breakout, pull back to the breakout point, sell. So if you've got a setup that only happens a couple of times on the 5-minute chart, that works on every time frame. The breakout pullback has been brilliant on FTSE, which I trade in the Euro session, and I've been trading it on a daily chart and 60-minute chart, and it's just smashed my day trading on. Yeah, just doing a lot of scalping on FTSE, which is the hit rate just wasn't very good, but my high time frame read was much better. So, oh look, S&P. But you know, I've got a special place for FTSE, I think. I like it because it's similar point values as well. Like when you trade DAX, you know, because DAX is at 18,000, and so, you know, you're going for 20-point and 40-point targets as opposed to 5, 10, 20 points on ES. And I used to make a lot of size mistakes, which you can imagine if there's 3 times the number of points, you're all of a sudden like, wow, this position is way too big. Like I can't scale in there. Like I'm already oversized on the first position. It's like, oh, come on. Yeah, cheers, mate. Fire up the Barbie. Great call. You don't want to cheat on her. Yeah. She's incredibly accurate. Yes. Like really to the tick stuff. DAX is quite accurate as well. But yeah, incredibly reliable. It's usually I was measuring the wrong thing, you know. So you see we're squeezing in this triangle, so we haven't run any stops for the bears. Bulls can have a stop below 11, although it's a bit tricky in the middle of the trading range to have your stop sitting in the middle there. I think we're still always in short, but we're in the middle of this range, so it's 50-50. I gave 55% to the bears because we're below both these, the 20 and the 200s. Gap down, pull back, and then a bit of continuation, but not in a hurry to go anywhere. So we can go back up. We were aggressively, or I was aggressively drawing a lot of magnets down here. No art prize there. Got one of them right with the breakout point. We have the lovely Rose coming on after me. I think in about, she's coming on after lunch. I think she'll be taking you through the next week because I think Tim's on a flight to Orlando. I think Brad's on his way there. Richard's already flown. I'm getting on a plane tomorrow, so yeah, that'll be good fun. So bull bar at the moving average, I think it's okay to wait still in this tight trading range. Potentially still sellers above in the top third. So a limit order trade is a bet on a failed breakout, right? So here's a good bull bar, but it's in a weird place. It's just below the moving average, which is sloped down. So if it's a stop entry buy, then the other side of a stop entry is a limit order. The stop entry is betting this is going to keep going. The limit order is betting that it's going to come up and reverse. 15-minute chart. Bears didn't really get a second leg. That could be the second leg. Now we're going above it. So will this be spike, pull back, and then a channel on the 15-minute chart? Maybe. No one wanted to sell down here. We rushed down to it, but then no more. So what would I need to buy? I think I'd need to see a decent bull bar on the 15-minute chart to start looking at the 5-minute for an entry. That's it, Roger. Long ledge. Yeah, it's a bit confusing because you say, okay, it's a 6-point stop if I wanted to get long, but I think actually the stop's there, which is 12 points. So in order to be long, I've kind of got to bet that we're going to break today's range up, and that might not happen. It might happen, but it might happen in like the next 2 hours at this pace. I think higher probability is closing any gaps. So I think this is the most likely gap to close. What are they scalping for? 89. Yeah, 2 or 3 points. Not easy. Okay, Wedge Hunter. Still in a triangle. Yep. Scalped out of the EMA on 29. Yep, well done. So where'd you get in? Would you buy below 26 or something? 23? I was already short then, but if I was flat, that's usually good long. Anyone who sold here sees that, has to sell to get back, so that becomes the buy setup. All day, been a great strategy to just trade to the EMA. We had it the other day where it was like scalp to the EMA on both sides. Al was in the room, this one. This is pretty funny. So I bought down here and held for that breakout point. So it was basically 5 points below, 5 points above, 5 points below, 5 points above. But you could only do it a couple of times before you got cooked. What do you do here? So nothing works forever, and at some point it failed. Bought below 27. Yeah, nice. Nice, that's a good one. Bad sell. Yeah, good call. Yeah, I missed that. That's a good one. Bad sell low in a trading range or bad buy high in a trading range? Good one. Yeah, good call. The longer it goes, you feel like, oh, yeah, I could just do it again. And that usually leads to pain and to suffering. As you finally get the breakout you want, it's just not the way you wanted it to go. I generally won't take the same trade at the same price. Does that make sense? Like if I get a chance to sell, comes down. If it comes back up here, I won't usually sell again. That might just be a bit of a defect in my thinking. Open to anyone's opinion on that. Oh, Matthew, that's a brilliant question. Let me just give that a bit of a thumbs up. That's So in terms of setup, so we'll just clarify, a setup is, we're talking about a pattern on the chart. Something's happening which makes you think that, okay, there could be time to place a trade, but you don't have a signal bar yet. And then that signal bar is like, oh, okay, now I've got my setup, and then you get triggered into a trade, right? So there are many kinds of setups. And I think it's a little bit personal in terms of what suits you as your personality. Some traders, super comfortable, just selling any of these. Other traders won't touch it until they get a limit order above the high of the bar. Some traders won't sell this leg, they'll wait for second entry sell. But what I would say is whatever, go back through your last month of trades. So I'm hoping everyone marks up their trades the next day, screenshots it, saves it somewhere. Go back through your winners, the ones that you like and that you seem to trade well, and see if there's any patterns. And I would focus on that one first. So, I'm looking for a second leg trade, so I'm waiting for a breakout and a pullback and a chance to trade in that direction. So I did it on the way up and I did it on the way down, right? And then I didn't touch anything else in between. I could see many other trades, and there's other places I could have traded, but by just focusing on a couple of things, I find I make more money that way. And I review both. Because you repeat the good trades, you also repeat the bad trades. So the most common bad one is kind of just entering in space when it's a late leg. So here breakout, pull back, that's a sell. This is leg 3 and it's big, and because it's big, it's logical to turn into a trading range, which means the sell's not down here, the sell's up here, and I can sometimes get into a sell and have to get out, break even, or take a small loss when I didn't need to. Struggling not to click the mouse. Yeah, take the hand off the mouse. I'm not sure how to do that one. Do market replay before the session. Get those clicks out. I would pick maybe 1 or 2 for a trend day and 1 or 2 for a trading range. So if it's this kind of day here, are you going to just walk away from the screen? That's okay. Come back later. But the trades here are a bit different. The trades here are a bit different. Put a box around them. So you need to be able to switch, flick the switch between this stuff and this stuff. You can't trade them all the same. And if you're not sure when they switch, then work on where the switch happens. What do you need to see? This is a range we broke out, pulled back, and there's a gap. Okay, so now I'm in something different. What 2 would I recommend? Oh, for a trading range, yeah, I would. In a trading range, I would wait for 2 legs. So 1, 2. and look for a buy signal. 1, 2, look for a sell signal. 1, 2, look for a buy signal. And if the bar's too big, wait for something smaller in the range, but or just not trade it and just practice a lot until you find an entry that's good. So put your fib over it like this, and don't trade in this middle box. You know, put a black thing around it. I think I even had one here. No, that's not it. I even had one here. No, that's not it. What happened? There we go, like that. Like, don't do anything in there. Yeah, breakout second legs. Testing your breakout point, trying to go for small bars 2 to 1s. Stop entries in the trending part, but they've got to be fades in a trading range usually. Like all these were fades. You wait for the stop entry, you probably missed the move. I don't know if that helps. Like in this, how many stop entries worked? That failed. Maybe scalps. You probably got out break even. No, that didn't work. How many of these stop entries actually worked? Very few. Even this one was in the right spot. So, there we go. I've actually come to the end of my time for this session. So I'm going to wrap up. Thank you very much for listening. Always appreciate a chance to jump on the live stream, and stay on because Rose is going to jump on right after this, probably after lunch, I think. But yeah, thanks very much. Welcome to send me a message on Discord. And yeah, definitely mark up your trades. Definitely find those ones that you're good at and stay away from the ones that you keep losing on. Seems like obvious advice, yet I've battled with it over the years. So hard to change. Awesome. Thanks, everyone. And I'll catch some of you in Orlando, and the rest I'll see you on the stream soon.
Okay, good afternoon, everyone. This is Rose. Today is May 29th, Wednesday, 13 minutes after noon. All right, so we have a strong gap down today and 4 bars sideways. Bear sold is low 1, low 2, but it is just too low to sell anything. Okay, so you have last week's low is magnet. We're very, very close to it. And this is last week's mid-range right there. And then last week's high right there. Okay, so 4 bars sideways, but every chance the bears try to sell 1, sell 2 failed. A strong bar 3, we trap the bears underneath. It's about 5 points or so. That's 6, so here is 5. So the bears started to sell. And quick thinking bears who got stuck underneath 3 will sell right around there, and that's with bar 11 they had a break even. Those are the quick thinking bears. So most of the machines is you have retail traders are looking for a strong bear bar, and there's one right there is about 10 points above. They're going to sell again, and that right there was their break even. So I told everyone that if you are stuck here, many bulls will buy underneath the first bar they see is such as bar 15, is because you have a tight trend line. Is first break, they're going to buy, they're going to try to fade it, go test the high because everyone else is probably stuck there. Is bar actually 17, If anybody bought the 14 close, when and test right there, which was actually close was 97.25. We went one tick above is 97.50, and we tested before coming down. So you have the first sell 15 and the second sell 17. Anybody who sold here and trapped with bar 4 underneath 13, selling it underneath 15 and then they exit out right there. Market bounces, but the problem here is that we have gap down, which is 3 bars, so it's sideways to EMA, and the market is looking for some kind of a double top at the EMA. In this case, it's actually triple top, up on this, down this, up on this, down this, up on this, so that's a bear flag. We barely broke the prior low, but we have, with a tick, is bears need to close a bear bar here, 34, if they want to sell. But the problem here is that this is a breakout point. So the breakout point is a buy zone, and is bulls, they hit a block of bulls there. So it could actually can reverse up, or if they break this the support, we could continue to sell into these lows. We got a magnet down here, but the bears need to break this support right here. So this is why we're hovering here, but we do have a bear flag, and we did take out this low. We just need another bear bar closing. So there's about 2 minutes and 38 seconds. This bar can close bearish, or this is going to act as support, and we're just going to go test this high. We could break above, because if the bull's seeing here some kind of a double bottom bull flag, bulls want to get back up and test this area. And this is a good place for them to trap the bears once again. 34 went below 33. So you can see that they have already trapped it, but bulls need to close a really strong bull buy here, and then they can buy one tick above. But you have a small trading range, and trading range highs are here. So it's lunchtime. Market is, here's what the market can do. This right here, okay, failed, right? So we couldn't take that out. Came down, so you got a spike here. You got a pull back. Market could continue coming down, right? But we need to get some kind of a rejection. Or we're going to go up here. We're going to make a double top. Much bigger bear flag. Because think of this as a one big bear bar. And if we get that double top, or maybe like that, market can still sell. What about bulls? Is they do see a bull flag. They want to test these highs, and they want to break out and breach that low of yesterday, which is a breakout test area, and then close some of that gap. Bear channel down on the 15-minute chart. Here is the trend line. Bulls want to go and test that trend line. It's also cup handle, double bottom, bull flag. So they're trying to test this high right there, 98.25. Okay, there's a small trading range here. We're testing that high. If bulls close bullish bar above the EMA, they might buy the pullback. Goal is to get back up to here. But resistance there, bar 18. But if we close above bar 18, we're going to go above bar 14. What about bears? We fail. We trap the bulls above the small trading range. We could come down, but you get a strong 34, and there's a bit of a gap there now. Now, yesterday we talked about market coming into the lower third of this outside bar, testing that area, and the bulls are in this vicinity, wanting to trap the bears and bring it back up. Possibly, if market could accelerate, we can go and test right there. That's where the seller's waiting again, okay? And that is around 33.16. 33.16 is not so far away. It is exactly the last week's mid-range. Bit of a consolidation here. Sorry about that. Can we sell? I mean, this area 18 is, there might be some sellers there, but they've tried to sell several times and it failed, and the support is holding. So the top of the trading range to me is right up here, so that's where they're trying to go. So this bar now closes above the triple top, 24, 26, and 30 high. Then we will go and test a high of 18, R18. So a bit of a critical area here. Bulls really need to find a way to close another bull bar. If we do get above 92.25, we're going to extend possibly into 95.75 or 96. We are way below the 1 hour EMA, so that makes us kind of bearish, but we're going sideways. Can bears sell? They need to give us some kind of a double top bear flag. Or here's what we're going to do. We're going to go up, and then that's going to make a wedge top, and then we will sell. Looking for 95.75, 95.50 area test. But we are testing bar 18, like I said. Bulls need to close above, then use this area. This is resistance at the moment. So bulls need to close above it and then come back down and use it as support to close some of this gap here. Bulls are not really out of the woods yet, so it could fail. We could still come down, but so far so good. But it's resistance here, so hopefully they will break above 18, bar 18 high. Oh yeah, there's beige book. Thank you. I totally forgotten about that. So let me take a look at the news. Yeah, there's the 2 o'clock beige book. I don't know how much effect it's going to have on us, but before then, 1:45, John Williams will speak. So the Fed's speech 15 minutes before beige book, but there's still hour and 15 minutes for that. So there's still room to upside. Market wants to test the 14 highs probably. 3 bull bars, they're good. I don't like the way the 36 has upper and lower wick, but still good bar. When the bars start to get smaller, that is right there, could be a momentum loss and we can pull back. And I said this is still resistance, and we have not broken above bar 18 high. So there is a potential of selling, but 2 bull bars above the EMA, closing 35 and 36, that's always in long again. So now the first pullback to EMA, they could buy. Unless we start to close below the EMA with strong bear bars. But even if that happens, we come down to the bar 33 highs, there will be some buyers waiting there. If the bears close the gap and start to overlap with bar 33, that's bad news for bulls. Bodies are getting smaller a little bit, 35, 36. So, and you're at the top, so it's kind of sideways. They did buy closer to EMA. They're looking for breakout from this bar 18 high. Inside bar 37 at the moment, but the bar hasn't really closed. Just 4 more seconds. It's not a good sell signal bar, but it is an inside bar. Some sellers are underneath that bar, 37, but it's not a good bar to sell. I think the market will try to stay above the EMA for a while and test these prior highs and make a new high next hour or so. So it's going to try to go just like this, possibly, maybe even gap a little bit from the EMA, and then we're going to get a couple of legs down, and the market will want to test bar 33 once again, and I'm going to look to buy and try to get above it. But we could, even though we could get above the EMA, we might stay around the EMA at the close today and not gap up. Especially if we take out the 18 high, that'll be the confirmation that we are going to stay above the EMA. They're going to buy every pullback, and it could create a small pullback. Bull trend could last for an hour or so. So my target was 95.75, 95 3/4. We're about, okay. I think that was 95.70. Yep, we just tested my targets. Good for the bulls, but they need to really get above, close a bull bar above to continue to go higher. But you got a trading range there, trading range highs. If we cannot go up there, we're going to pull back to the EMA. And then there will be buyers waiting again. But that was my target. So I did buy above here. And because it was a good entry, it was a trap and a reversal pattern from here. Outside up bar 34. My target was 95.75. So I got that. The market doesn't need to stop here. If bulls are seeing a bull flag, then these highs, definitely they're going to take, they could test and take profit. And then even if we break above, we're going to have to come back into this red zone. We did not close above bar 18 with a bull body. Bears looking for some kind of a backdoor to enter and scalp a few points down towards the EMA. So they're trailing sell stop orders underneath 35, 36, 37, now under 38 is waiting to enter. So they're looking for market to go and test bar 38 low. Outside down bar, not there. So how would you sell this? It's very difficult. You have an inside bar. I prefer in this situation an outside down bar to sell. Inside bar is a good signal. It could come down a little bit. Like I said, the test is 38 lows, and we could go 1 or 2 point down, but the buyers are probably waiting, not so far away. So selling is kind of difficult here because you're selling against a tight bull channel, 1, 2, 3, 4, 5 bar. So it's a bit of difficult situation for sellers. But inside bar at the high of a trading range, if it closes as an inside bar, 38 is not a good rejection bar, so that's why it's another reason why it's so difficult to sell. But market is still trying to come down and test the 38 low. And if we do find sellers there, we could quickly pull into 31, bar 31, because they sold with 2 legs there. So we know the bears are stuck there. So they're looking for a sell, reach this area, overlap before it goes up. But the problem here is that if we do not move underneath the EMA, we can test the EMA and bounce from it. That's all you may get, okay? So if anyone's selling underneath 38, they're prepared to grab at one point and they anticipate failure around the EMA, and the market could reverse right back up again. So this is why I don't like to sell. It has to be a good 2-bar reversal from the highs. It's a good location, yes, maybe, but to me, these bulls are taking profit due to testing these highs, but they're disappointed they could not close a bull bar above bar 18. So it has to come down, right? A little bit at least. And there are stuck bears here, so it's trying to come down and overlap with bar 31. But failure to overlap, bulls will take over once again. Okay, so bar 39 went 1 tick below 38, and the sell orders actually activated. But problem here is the bar 38 is not a good sell signal bar. Okay, and then bulls buy it, and they want to bring price back up to the close of 38. So the bears need another bear bar here if they want to get 2-3 points the minimum out of this. Sideways market, it's consolidating, so it's going to get a breakout or a breakdown. You have is, look what's happening here. The moving averages, the 1 hour EMA, and then the 20-minute EMA, 5-minute EMA, 20 bar, 5-minute EMA. There's a big gap in between, but they are parallel to one another. And we are below this, so they're going to try to sell strong bull closes around and above the EMA and try to keep the market underneath. But the problem here is just this big gap. If should have been a much tighter gap, then I would look for a lot more strong sell, okay, legs, bear legs to come down. Because this is a magnet and the gap is too much, they are trying to close some of this gap. So it's very difficult to sell, bars. So look, this 14, there's a difference between bar 14 and bar 38. Bar 38 is basically a doji. Okay, it's got a large amount of upper wick and a large amount of lower wick. It's not as a good close as bar 14 for limit machines to sell. Look, they have sold, made several legs. This isn't all that great. So that's why bulls are buying. They want to go back and retest. So that's one of the reasons why I didn't want to sell. Bulls trying to close above 95 3/4 so they can reach the prior highs is like 15 and 14, and then go higher towards like 52. 5,300, 5,299 and a quarter. I would say 5,300 is their magnet. Well, it's been a magnet for some time now. Market has been there, broke out, came back down, broke down, now going right back to it once again. So 5,300 is where they want to get to. But they need to close a bull bar. What about bears? Can they still sell here? Well, the first attempt failing. Maybe they will get a second attempt, but I think they're losing the ground. So there's still 1 minute and 25 seconds. I did say the market is probably going to go and test the close of 38, and it's doing that right now. If bulls actually close the bar bullish, they could continue to go up. What about sellers? I would like to see bar 39 highs, like couple of ticks above tested and a close a bear bar, then I would sell it. But I don't have that set up yet. So inside bar disappeared. 39 is no longer an inside bar. Another reason why not a good idea selling. If bulls cannot close a bull bar here, or close away on its low, we can come down and still test the bar 36 lows. Remember, those who sold underneath a not so good sell signal bar 38 are stuck. So they're looking for a place to sell. They're disappointed. You all can hear me, right? Okay. My headset just went mono for some reason. Sometimes when that happens, I lose connection, and just checking. Thank you. Okay, so the bulls stuck up here, but again, it had a break even, but it's not able to close a bull bar is a problem. They have to close this bar. 41 is one tick above the close of 38. That would be really good for them. Trend line is magnet, so market's trying to reach there. Not the best representation, but about. I mean, it might be even like this. You can use the highs if you like, but then we need a breakout here. So if Asia low is target, so we could actually accelerate and reach 0575 even, and that is somewhere up here. Where can market go? Well, impulsive move down, pull back, impulsive move down, pull back, and a final leg. If bulls really get serious, okay, is about buying, this is going to be your projected target. Or just to be conservative, because you know me, I'm conservative. No, I look at Asia as differently. I look at it as initial balance zone is where market makes a breakout or breakdown. So to me, that's from 9 p.m. Eastern time. I'm sorry, 7 p.m. Eastern time to midnight. So I only, because after midnight, US, a brand new day for US. So that's what I'm looking for. That's my Asia. Yes, it does go all the way to 2 o'clock, to 2:30, but I don't look at that. That's what I look at. All right, so we made a new high, but because it's a trading range, right? No, actually, it's equal highs. It's not even one tick above, but you can see we already have a gap here. So market could stay above EMA for some time, is maybe 20 bars before coming back down again or testing below its EMA. It is a small pullback bull trend at the moment, with pullbacks that are shallow and only 1 or 2 bear bars. It is also spike, pullback, and channel. So here is your spike. It is a bull flag. Pull back, and you are in a channel. So you have your first pull, second pull. You could do the third one before coming back down to this area. And then we could buy once again. So when the EMA comes around, there will be buyers around the EMA. We could then get another bounce and reach either this one or that one. Or they're just going to break out now. So this is why I didn't want to sell anything there. So anybody who entered below 38 is upset. You do not want to sell against 4 or 5 bull bars. There will always be Why? Because you have a trend line there. Why is this? Oh, I see. Okay, so you have a trend line there. Okay, first breakout or breakdown of the trend line. There will be buyers waiting to buy, and then they want to test the highs and probably make a new high, and that's another reason why you don't sell. But we don't have a good breakout from the prior high just yet. Can market make a big double top here and a huge bear flag? They might, but so far so good for bulls. Bears who are selling, their stops are around 5,300 and quarter or 5301 area. They're looking for market to come down about 5 to 10 points. Five-point scalp for bears is around 5293 if they can bring price down. Terrible sell signal bar. It's an inside bar. Doji's weaken the reversal. Even if you get a good signal bar, is here. They weaken the reversal. But bears want some kind of a reversal down towards the EMA. Or test of underneath bar 41. Two bull bars, probably buyers underneath 41. Remember, this is spike and channel. Channel lows are targets. So I did sell. I'm looking for a 5-point. I'm one tick above the 5-point. 5-point scalp is 5293. I'm one tick above 93, 93.25. Let's see if I can actually get that. Scalp right here. I'm measuring from the 41 high. Oh, I got it. All right. Oh my gosh, that was great. I mean, even just, wow. Okay. All right. That was the quickest scalp I've ever done, 5-point. So, but here's the thing, I did say any kind of reversal could be weakened because of the doji. Now the question is, how is this weak, Rose? What are you talking about? This was very strong, right? Well, what if it just ends here and then the buyers show up? That means your reversal would be weak. But here's the thing, this is a surprisingly large bar. What is market doing? I don't know how it's going to close, but I did warn you about that double top, and this is a perfect double top. It's an equal high. So you got a trading range highs here, so this could end up becoming a leg in a trading range, and the buyers could show up again. So if we do not get consecutive bear bars all the way down here, then dojis are signs of weak reversals. So what are we testing? We are testing the pullback bar, spike pullback bar is 37, lows. So now my question is, are there any bulls here? Or are we going to come down all the way to the bar 33? I would assume there are some bulls here, and this is going to be weakened. But that was very good. I don't know what is scheduled at 1 o'clock, but there is 1:45. John, oh yeah, you're right. Note auction. There was a 7-year note auction, accelerated this. So it's kind of a news bar. We are so close to the 1-hour EMA. Market is trying to come down and test it. This is kind of a second leg down for bears. So it was a good area. I did sell, but I was really going only for a 5-point scalp, and I said we may not go further than 5. So I'm going to take profit there because of this doji. And then there's a gap here that the bulls may want to keep this gap open. So we are testing the EMA lows. What does that mean? We could still bounce from here. What about bears? Can they actually swing here and take out the open of the day? And it's kind of a trading range, tight. It's not all that wide. Bears want to come down and test the open of the day. They want to breach below it, get to the magnet. So if we start to swing short from here, there's a double top neckline. That means I want to see a bunch of bear bars, okay? It's threatening this support area and wanting to break it. That's fine. Then I would have a measured move down, but I need to see that. So we have a 1 bar close below EMA. Doesn't mean we are always in short. Bulls are trying to weaken this move down, thinking that this is a spike, pullback, and channel. We're testing the channel starting. So they're trying to bring it right back up. And all they have to do, close that bear body gap and reach back to the doji lows. Okay, they do that, then that's it. Then bears lose track. But if they keep this gap open, we can still come back down. But you can see how that doji weakened the reversal. So it was nothing but a scalp for me. But if that gap stays open, bears can get a follow through. They're looking for a 9 or 10 point swing reward here. Their 9 point is, oh, they might actually be going there. 89.25 or 88.25 is 10 points, so they are going for that. If they close another bear bar here, I'm going to assume that this is a double top reversal to neckline, and that's it. And we could actually make new lows today. But I don't know yet. So far, bears are going for that 10 point. They got their 9 plus, so good for them. But I don't know if they're going to keep moving down here. There's a gap here still open. Okay. That gap is not closed. They found buyers in there, so it's bouncing. But those bears actually made money. Not perfect 10 point, but they still made money. So now can they move market further down? They're going to have to go way beyond 10 point. They have to breach 87.25 further down to keep moving market bearish. If they fail and we start to get bull bars, we could go back and test the highs. So bears need to close this gap with a bear bar, overlap with 33, bar 33 is in order to keep coming down. If they fail and we start to get bull bars, we're going to then test the highs again. So that gap close is important. And I like to see bears actually breach below 52.87 if they're really interested in moving market further down. If they fail, then we're just going to go back up again. But what about the small pullback bull trend? Well, that is a big bar. So the bear's trying to have a second bear bar underneath the EMA. If they succeed, too bad for the bulls. If they fail, then we're just going to go back up again. And if that happens, if we do go back up, okay, or get above the EMA, then we may not come back to EMA for a while. We could just go up and up and up and up, and then come back down. Okay, so that's the price action that the bear's trying to prevent. So they're trying too hard to close that second bear bar below the EMA to turn the market into always in short again. But one thing that they fail to do, closing this gap. That's a wick. I need a bear body literally taking out this gap. Okay, so that means it needs to overlap with 33. If If that doesn't happen, then this is still bullish. So we didn't get the second bear bar after 43. You can say that that doji definitely weakened the reversal. Bears want a second leg down there. Bulls want to close the gap up from the low of 42 to the high of 44. So it creates a sideways price action. So basically it's open. I mean, it can go up, it could go down, either way. But since every time the bears try to sell and they're failing, I think bulls got an upper hand here. But I don't like this double top bear flag formation, a bigger picture. So this resistance, even though it breached, try to sell twice. First one and second one. So now, are the bulls done? Because they're afraid of the bar 43. It's a significantly large bear bar. Have they been exiting underneath? If you are a bull stuck up there, you buy again at the breakout level, you have a break even. If we get a bear bar, that might be the case. So we need bulls to close another bull bar here and minimize the gap above. If they fail, bears will run this down with leg 1, leg 2, possibly leg 3. And that can drive price down to 52.85, which is right here in this area. And that's the second leg, it seems. So I didn't buy anything. I am flat at the moment. I want to see, because there could be another one more set of buyers here. If I don't see bears breaching 87.25, like I said earlier, I'm not going to expect 85 or 84 test below. If bulls don't show up here for the second time, and the bears actually do breach the 87.25, then I might actually sell into 85 and 84 area down below, and then look to buy once again from there, the reversal. So it's middle of nowhere. Just don't want to touch it. Anyone sold underneath doji with a very little? Remember I said there's stops up here and they can sell. That's a rejection candle anyway. It doesn't matter doji or not. So they were looking for a 5-point scalp, which they got it. If they close a bear bar underneath, they're going to go for a 10-point, right? That would be their target. Remember I said we would go test the 85, and the 85 is I think one tick under. So that's 85.50. Just 2 more ticks. I mean, it could reach there and 2 more ticks below. But we need a bear bar close on its low and take out the 5-point scalp. Then scalp becomes a strength, right? And that's where everybody's holding their runner. And then they look for a swing target 10-point. Why is 5-point is important? Well, it's a standard deviation on S&P. Okay, therefore it's a solid scalp. Anything more turns into a swing. You have an outside bar 44 followed by an inside bar 45. Buyers at the lower third of 44, they want to bring market back up to the upper third of 44. And they want to get a breakout from there. So there are probably trapped bulls waiting to trap the bears at the low and lower than 44. When you're looking for a breakout from underneath 45, and if you sell, you might get stuck because they're going to try to reverse it back up to the 44 high. Because they're going to try to reverse it back up to the 44 high. This is the second time we're testing these bearish 10-point zone. If the bulls show up here, we could reverse back up pretty strong. We don't have 2 consecutive bear bars below the EMA. That weakens the always in short. But we do have a gap open above, so bears see that as a strength. So they want to 97.25 test and beyond, and then go down to 95. But I expected a second test and then second time bulls try. So I want to see how strong the bulls are here. You're in the middle of this trading range. That makes it difficult to do anything. This is why I don't take a trade here. Anyone who sold underneath 42 looking for a 10 point. So they already scalped, and that's one of the reasons we're going sideways with 44, 45, and 46. They're looking for a follow through with the second leg down to the 10, 9 or 10 point and make money, and then so they can go up. But you don't know. You don't know if they're going to get that, and that makes it difficult, so I prefer not to open a trade here. Bears trying to close that gap by overlapping with 33. That's good for them, because if they close a bar like that, they're going to come down to that 10-point mark I marked, price point I marked, and they see a perfect double top bear flag formation, so they want to take out the neckline 33 low, and then close below open of the day to turn the market even more bearish. If we do that, we get a new low today, and the magnet is down here. This is a buy zone area. I also have a 2R from Asia range calculated, which we left it behind, and you can see we have a wedge top bear flag. Not the best one, but it's there. So the market wants to come down here, break below, get the 2R and test this buy zone, and then reverse back up. If that's the case, they need to give me the neckline break with strong bear bars. I will sell the first bear flag I see. But that decision has not been made. Some will say this is always in short. Why? Because bar 43 has a gap. Okay, but it doesn't have a bear bar after that. So that is a micro double top bear flag with 44, 45. Okay, sure, but not the best setup. So we are breaking the outside bar 44 lows at the moment, but that's a fake breakout. We need a bear bar closing at the minimum 1 tick below 44. This is where the bulls live, and they want to trap the bears looking for a breakout or selling too early or selling the second leg into support. So bar 46 failed to get that bear breakout body, and it is the second leg down still. Bulls want to bring it back up to the 45 high, 44 high. Sellers waiting upper third of 44. If we do go back up there, there will be sellers waiting, limit sellers. Like 92.25, 92.50 area is where bulls are trying to test. There are some sellers up there waiting. As early as above the 46 doji or the 91.75. We should test 91.75. And then accelerate up. Okay, here we go. So I did buy into this trap, okay? But I don't like the way the 46 closed. It should have been a bull bar, and we would have accelerated even more. So I assume we're gonna, okay, so we just tested my limit zone. I took profit there in case the bears actually do show up here. So if they do show up there, we'll come back again. We'll come back down again. But you see how we just tested? Bulls want to test the 44 high and get a breakout and get to the breakout targets or test the highs. But I always assume because this is that limit buy setup underneath 45, but they couldn't close a bull bar, so this is going to be weak. So if I buy it, I'm going to somewhere here, take profit and step aside and see what the bulls are capable of. Because kind of a bad buy signal bar, we could come back and retest 45, 46. Are you guys able to follow what I'm saying? Because this constantly repeats. And I keep saying the same things, but as you hear me keep calling these things, it's gonna kind of tattoo to your brain, and you'll realize what's happening, right? But if it's not clear, do let me know. It took me a while, like when I said when I first joined the Elbrooks's, look what's happening there. See, so I know I'm jumping around. I'm sorry. I'm gonna get back to this setup, but let me make this statement first. When I first joined the Elbrooks's trade room, I made a mistake that every other trader does. Hey, I'm smart. If I just watch the guy for a couple of weeks, I bet I can pick up on a couple of good setups, and I'd be able to trade. So therefore, I don't have to pay $99 a month and save money, right? So. Everybody did that, so I know you're in denial, but you did that. So nobody wants to pay $99, which is nothing. But we all like, trying to save money here, and you think that you can learn so quickly and become a great trader, right? Trader of the year, and it never works out. And so that was a, rude awakening, because I was not done with the course, and I thought that I was smart enough to figure that out. When I first listened to him, I said, what is this guy talking about? I don't understand anything. He's going one way and the other way. He's talking both sides of the trades. Why? It's because market trades both sides, right? There's a bull case, there's a bear case. It took me a while to understand that, and I've been a trade room member for years, and that is the best $99 I've ever spent every month. I never cared for it. But we all do that because everybody thinks they are good, smart, went to college, have degrees, whatever. But price action is the most important, most difficult thing to learn, okay? I don't care how smart you are. It's a repetition. If you really get the repetition down, that's when you start to make money. Okay, so that's why I'm keep repeating, and many people actually complain that I talk too much, but that's the reason. If I keep repeating the same over and over, you're going to eventually remember it, and you're going to call it before I call it. So that's what you need, okay? So I know I'm like a broken record. Sometimes I keep repeating the same thing. One time, one guy actually complained on some Facebook group, said that, she argues herself and she doesn't even believe. It's not that I'm arguing myself. I'm arguing the bear and bull case, and I'm looking to see which one is going to fail, even though they look strong, right? So I need to see that there's always a trade there, right? So I don't want to miss that trade. So I'm not arguing myself. I'm looking at the bear and the bull case. Anyway, but we all did that. And there were times that I was actually mad at Elbrooks because he was taking the other side of the trade, and I misunderstood him, and I took the completely opposite side, which I shouldn't be on there, selling. Like, he was buying and I was selling, and then he explained, like, okay, this is where I'm wrong because I didn't listen, well enough. Anyway, the moral of the story, I'm going to keep repeating myself a lot, so get used to it. Okay. Anyway, let's go back. So how did I expect market to go up to the upper third? You guys know this already, but if you're new, so we get an outside and we get an inside bar. I always look for failures from the outside bars, high and low. I call that a mother bar, but you don't have to call it a mother bar, all right? But it is what it is. So to make things easy. So basically what this is, that you have a range and there are a bunch of bars stuck. So that creates a buy low, sell high, or sell high and scalp kind of situation. So basically what you are in is in this range, okay? So I expect buyers underneath bar 44, starting from here, lower third, going all the way to here. This is a trap zone. I learned that if I lace this area with bunch of buy orders, as it bounces, I will make money. But I have to be super careful of expecting a quick breakout, because starting from here to here is also sell zone, right? It's a limit. Sellers are waiting because they have sold once. Most likely they will sell again. The reason why you're getting these upper wicks on 47 and 48 is because the smart bulls are taking profit there, expecting they're going to hit a block of sell orders. When do you know the market is going to go and test the 44 high? When the bulls actually close a bull bar above this upper red line. Then you know market can accelerate, tag right there, that's the upper trap zone, and still come back down. If the sell bars are not there, absent, then you look for a breakout. Okay, so just wanted to repeat what I saw there. I kept saying that I am looking for trap here. I'm looking for, so I got my first sign, okay, right there. Is 46 did not close a bear body, minimum one tick underneath bar 44 range. That's the range we are stuck in. So, and plus if you look left, is the last bear bar before the bull breakout, okay, creates a buy zone. So we tested that buy zone. Look at that. We tested that buy zone and it bounced. So we know the buyers are so strong here, they want to go back and close this gap and probably test the highs. So I bought there, scalped here, okay, and stepped aside. So now, what do I see here? Bulls are trying to get to the 44 high, which I said that we would test, but those bulls are not out of the woods yet. We could go and test here. We might actually reverse back down. So you still want to pay here. There are sellers waiting. But the one thing that is good for bulls is that this bar outside down bar, okay, whatever, up bar, whatever, outside bar, is actually a bull bar. So that means it actually increases the chance of reaching the first shallow breakout target and the second one, okay? But look what just happened there. Look, exactly how I said, that is the upper trap zone. Did we trap them? Look, I don't know if we trap anybody, but this is where bulls, smart bulls, bought here, taking profit there. But they are now thinking, okay, we now have a signal of breakout. We have a solid breakout, so now they want to reach here at the minimum and then maybe even get a breakout to there, and that is the measured move target of this entire 44 range, okay? So this is where they want to tag now. So we trap the bears is underneath the EMA. So we have another flag here, okay? I'm going to delete this. You can have it on your own chart. What does that mean? Well, if you can count, we got up, right? You got the first leg, you got the pull back, you got the second leg, pull back, right? Or up on this, right? Down on this, up on this, down on this, up on this again, down on this again. We got 3 pushes, so it's a bull flag. And a really good bull bar, right? Created a gap. We need to come back and test that gap and fail to close. We go test this high. And then if we can get a breakout, we can even accelerate up. So bull's looking for a trap. I'm sorry, close of the gap with bar 43 body. In the meantime, they created a gap. So we want this gap to open and this gap to close, and they can buy, and then we could go and test this high. They're going to scalp and they might leave a runner. So what does this mean? Remember I said, yes, this is a double top. It might create a bear flag, but it could also make another push before coming down. So we might need a wedge bear flag in this case. In the meanwhile, we make a small bull flags. Because you are in a trading range, okay, it's also some kind of a contracting triangle-ish, right? You're right at the apex, so bulls need to stay above this apex line. Bears want to come down and test here, get a breakdown, and then go right back. So it's very difficult. You're smack in the middle of the trading range once again, and this is why I took profit there. I could have held it, maybe had a runner and test that trap zone, but I'm talking, explaining, so it's very difficult. So what now? We have a breakout, and bulls are not doing all that well. Where is this going? It's going to the midpoint of 44. That's still a support there, right? So I removed it, but you can draw it on your own chart. Okay. I'm measuring the 44 range, entire bar. We have a breakout. Bulls are disappointed, right? It pulls back. Disappointed bulls are looking for a place to buy and break even. The 50% of 44 is a good place. There might be buyers waiting there. But you always expect some kind of a trap, right? Always. You don't look for clean breakouts. Here's the trap number one. Here's trap number two, even though we breached. So is some buyers here, some buyers here. They want to bring market back up. I've already exited here, so I'm not stuck in this. And even if I stayed, I would have scalped very heavily here. Bulls are disappointed, so they want to trap the bears for the second time. That means they have to start buying again. But this bar closed below, so this would have upset me a lot. But always expect the bulls buy again. They're stuck. So if you are a bull, right, maybe you bought here, you buy again somewhere in this area, right? And you want, let's say you bought early, right, somewhere in this red zone. You still want market to get up here. Or you can even buy, this is the external trap zone, this is the extension. So what I do, I lace here, here, somewhere here. As these orders are activated, I'm expecting a pullback and I want to break even. But I don't trade like this. If I'm buying down here, I take profit there because this was a trap. Most likely bulls are going to get trapped there. So why get trapped and try to scale in and scale in and scale in? It's very difficult. See, with this kind of technique, I do not do that. I don't scale in. I simply, because we're in a trading range, I simply take what market gives me and I step aside. That's it. There's no bearish breakout, but bears can get that breakout. We get that bear body close, we're going to tag there, we're going to tag here, we could come all the way down here. So why keep buying, scaling in? You don't know if the bulls are going to be able to trap these bears for the second time. So I don't do that. I see nice. I said, okay, this kind of increases the breakout to upside, but they couldn't get it. Phenomenal bar 48. How come they couldn't buy the pullback to 50%? That's a sign number one. If the bears are closing below the 50% of this range, that means they still want to test here because they got trapped underneath 47. So they want to get back and make money again. So what do? Say I'm stuck. I'm probably not going to buy anything. I see this bar close like this. I just exit out. Or I reverse it, whatever. But that's still a bad trading. To me, as I learn how to trade this, it's bad trading. This should not have happened. That is a big sign. Breaching and not getting a pullback and a bounce, that means bulls are done. They're trapped big time and they're losing. Now, bears sold from the trap zone. They came back to the safety. They're making money. But that is a false breakout. Without the bar closing a bear body one tick underneath 44, it could still reverse and go back up. That's not a breakout. Anybody who sells it exactly like this could be trapped when it closes like that inside the range with a body. So the bulls now probably thought that this bar is too big to buy in the trap zone. Let them go to some kind of a target, let them make money, and then we buy over there. So if you are a bull, you're stuck up here, you buy again here. Look where the market went up to. So it really didn't go up, but it's kind of trying to go up. And the next bar, we could go up to that level. So if this bar does not close outside below the 44 and closes well inside, other bulls can buy that close, reach here, and then come back down. So this way, these bulls would get a break even. But if this bar closes one tick below 44, then bears can sell and reach here. We may not go up there. So this is basically where every bull wants market to go to. Everybody's waiting for this bar to close. So there's 1 minute left. So in situations like these, I see this mess, I'm scalping. I'm not in a swing. I am scalping. I'm going to take my profit there or there, and I'm going to step aside. So I don't have to scaling and fix, because some brokers, they don't allow scaling in, okay? So if you are trading with other people's money, not your own money, not your rules, that means you may have only one chance of scaling in. That's why I take the profits, okay? But if it's my account, then I know I can buy, okay, dip, and then expect market to get to that line. All right, there's 10 seconds left. Where will this bar close? Very important. They're trying to get the breakout with the body. Oh, they failed to get the breakout. So now, bulls we're going to fix this. We're going to get back up here. This is, we are suffering. We need to get market up here. They're trying. You see how they're trying? If that bar 50 were to close one tick under, you would not have gotten this bar. Would have probably just go up a couple of ticks and then crash. See, I don't like to, because it's 50-50. It might go up here, may not go up here. I don't want to mess with that. I see this. You either take the loss underneath 49, step aside, or get paid right here. That's even better, and step aside. To me, this isn't a setup. To me, this is not sell the pullback setup. I don't care if it comes down here or here. I will not have sold this. I need to see a bear bar closing at least here. Then I would look for a pullback, another bear close. Then I would sell and look for these levels to be tested. I see this kind of a setup. I won't even bother selling. I won't touch it. Because the moment I sell it, it can just reverse right back up and I'd be in trouble. So I have rules for this. So if I were to sell that close with bar 50, I would have been very upset. Because I know there's a reason why 50 did not close one tick underneath 44. Bulls are trying to get it back to the safety. 48, no. Because 48, yes, it does look like it could be a candidate. But maybe, yeah, you can use it because we did reach this target. So you can actually use, instead of this, right, this now. So this is your new, now you can say, okay, now they have a breakout bar with 50, and that's why it's coming down, and it can even move down here. Now you can say that. I didn't see that, but you're right. So see how bulls fail there? There's no way. And another reason why they're failing, it's because according to this combo, this sequence, bar sequence, now we have a breakout, 50. So now we pulled back and it's coming down. But if I were just to trade this one, okay, I would not have sold anything here. it's got a really large lower wick, even though it's coming down. It's just that not all that great to sell the close, even sell underneath. Because the bulls are still stuck, they're still trying to bring market back up. So say I miss this bar, outside, inside, and a breakout, and the bears are selling. That would be my reason not to sell. And then if I realized, oh, okay, so we already reached that first breakout target with 44 breakout, but it was a false breakout, but they reached the target anyway, that qualifies this bar as the outside-inside sequence. So now we have a breakout with a stop above. Bears got their first target and a second target. They want this target, but nothing closed below that line. What if it just reverses back up? It's too late to do anything for me, so I don't touch it. Because this area is support, so you have now maybe a complex leg 1, pullback leg 2, could bounce before getting another leg. But, okay, so let's talk about bears. Okay, I do see it. You say, okay, I do see the sequence, and I see the breakout. How do I sell this? The limit order sell, you look for a breakout test area. I put a sell order there. I put a sell order somewhere up there. Okay, whatever. Even if it pulls back, I'm selling, right? But they started to sell with limit orders right at the breakout level of 47 and immediately got their 2 targets, 1 and 2 again. But no bar closing below this target line. I don't know if we're going to be able to get there. So my entry would be right around the low of 47. The breakout pullback to the breakout level and sell there. What if I just put a sell stop order underneath? Well, if I do that, I would get filled and I would be in trouble. So I'm forced to sell up here again. And then it would come down, I would break even. So technically, bears can actually bring market down more here because they have sold and they sold again. Stop order sold underneath, not all that great stop order signal bar. But they entered, and then they were forced to sell again, okay? Now they're in the middle, so the market is deciding now. Do we go and get this full target, or do we reverse back? As long as we don't have bull bars closing inside back of the 47 range, I don't have to worry about, and I should never buy anything. Because bears, this bar closes without closing, with a bull bar closing inside the 47 range, that's still bearish. Market can still come down. Keeps testing the breakout level, and it keeps finding sellers there. So when do I look to buy? I like to see strong bull bars closing inside and taking out the midpoint if there's no new sequence, the mother bar combo or outside inside combo. Then I can look for bull bars closing. I might look to buy, but there's nothing to buy here. Bears are still selling. They want this target right there, which is the measured move of this leg, this bar, 48. I'm sorry. Keep saying 47, but I meant 48. And they're struggling to sell here because there was a strong impulse leg, got 2 legs up. So this is support here. So they're struggling. So this kind of signals me if we're not going to be able to break below this target line, that's all we're going to get. Now I should be anticipating bull bars closing inside the bar 48 range. But I will do nothing until I see that bar. I mean, I could just target these. Yeah, I mean, Roger said something there. It really is easy to use this, but you have to understand the rules. So you got a breakout here, try to sell for the second time, not doing all that great, so it's going sideways because you got a doji. You got a bar with a mid-range close, bar 50, but follow-through bar is a doji, so that puts us in a sideways. Because you got several legs down, so that puts us in a sideways and up, okay? And if you keep selling this and you haven't taken profit here, then you don't understand what's happening in front of you, right? So look, is test, take profit, second test after selling, again, the breakout level. is they did not close a bear bar below. They closed it right here. That's still okay, but it's not a signal that it's going to follow through. So they tried again, but if this bar now closes bullish, that's not good for the bears, because it could easily go and reach the midpoint of bar 48 and then become bullish again. But there are sellers waiting up there. If market reaches here, there will be sellers wanting to sell, because anybody who's stuck down here can get a break even. But I have anticipated that. So now we have bar 52 barely closed inside the range. It doesn't really count. It didn't really close. It closed right at the breakout level, but the bulls are trying. See where it's going? Probably sellers waiting there. If the bulls cannot close a bull bar above the midpoint, we're not going to become bullish. But if they do, we're going to go and test the upper, okay, either the first, this area, sellers are here, or we're going to test around here, sellers could be up there. Limit zone, they found sellers. So now anybody's stuck here, right? Maybe they sold here and trapped. They're selling inside here. Maybe the earliest sell order was at the lower red line. They want market to come down to the safety price, which is right there. But if bulls start to close above the two red lines, that's it. That's bullish pressure. You're not going to expect anything coming down here. So far, they're trying to break even. These bears stuck underneath bar 50. If the bulls cannot close above midpoint, it could, next bar, we can actually come down here. But if they do close, then there will be a lot more selling above there, okay? They're going to have it. Then you have to remeasure it, right? You entered already. Maybe you enter again here, and or maybe there, right? So you don't sell. You just have to wait for these to be tested. So what do? Now your break even is here. Now it's going higher. See, once I see the 50% not selling, okay, just like here, this is the same thing. Once I see the 50% is not selling, we never pull down. That means market is going to go up. If I'm stuck down here and I didn't take profit like you're supposed to, then you have to be patient. You can't just scale in everywhere. You already scaled in here. Now you're going to have to scale in once again, right? So that's, maybe you can stretch it up there. You still expect market to come down a little bit more. But I don't do that. I see this. This is why I don't like to trade inside the range. I like to look for a breakout and buy the breakout and go for long targets. Or I look for a breakout and then look for a pullback to the breakout and then look for sell targets, the breakout for bears. Here, things will happen. And the biggest sign that the bulls are not going to stop is that when the midpoint of the outside bar is not selling, okay? Now, I want to talk about something else. Look at this. People have been asking me about this. That's why I'm going through this exercise. We reached the targets. In fact, two of those breakout targets. We got another combo. Now you can actually take this as your range. Okay? We got a big breakout. I don't like it when it breaks out like this, because you buy this as soon as it closes and it just reverses right back down, because you're too late to buy. Anybody who bought here because it was a wedge, remember we counted and it turned out to be a 3 legs down, it's a wedge bull flag. I said it's going to probably go there. As you buy this, everybody else is taking profit right there. You see this? This is the new outside-inside bar combo. You have already a big breakout. The moment you buy it, it ends up reversing back down for a significant amount to make you nervous. So sometimes I let it go. If I didn't buy the bull flag, I let it go. I wait for it to pull back, and I look for a pullback buy. But others, pattern recognition, they bought it and then they took profits right there. So you would say we got a new high, right? So you got a high 1, you got a high 2 entry. They bought the high 2. At the highs, you have to take profit. So they are paying themselves here, bulls. Can market go higher? We have to take out the 41 high with a bull close. Then yes, it might actually break out to the upside. But you're at the top of a trading range once again. Could market be squeezing here? Squeezing the bears out of the market? Well, I don't know. But look what's happening here. We haven't really made a new high and then come back down, so I don't know. But look what's happening here. One thing I know is if I buy here just because I see a beautiful bar, that's just a leg in a trading range. It's probably going to come down. That would be bad. Yeah, I mean, we're only 4 minutes away from another news. So if I'm going to buy anything, I would measure the last outside-inside bar combo, is look at the breakout levels and see what we pull back into and whether or not are there any buyers there. So here is the bar that I measured, bar 51 range. Is we've got a breakout target met and we pulled back. So will that hold? Can I buy that? Maybe. We'll see. Some bulls will buy these pullbacks, thinking we can go even higher. So this would be 1R. They want 2R, 3R, and then somewhere up there, 4R for this bar 51. It's news, so let's see if the news could help us break out from this area. So what would happen? If we get the breakout, look for a bull bar closing above this high. We'll go up, we come back down, and then they will buy that one too. That's the target they're trying to reach. Or since we didn't take out the 36 low, you can use this entire leg. See how that breakout pullback worked? I said I wouldn't buy one tick above it, because if I did, this would have pulled back so much, right? Like 3.25 points. That would make me nervous. Or I would buy small if I'm really inclined to buy and really looking for a breakout. Then I would look for a market to go up and pull back. I would buy that pullback and add more. The reason why I didn't want to buy 53 is that it was a breakout bar. It's a breakout signal, but it's huge. So I prefer the breakout bars from outside-inside bar combination to be small, so I can buy the quick pullback and go, because my stop would be not so far away. Because stop is underneath the inside bar 52, right? So you go back to the course where L uses this combo and where he puts the stop, it's always below the inside bar. But if I'm looking for, right, so if I buy either the close or one tick above my stop there, right, I mean, that's 97, 87, so that's literally 10 points or 9 points and a quarter, right? So it's a lot to make that. So anybody bought above it, they bought the pullback to one of those targets that they breached and then possibly made money. But now you see how dangerous it is. basically, this is a leg in a trading range, and every smart bull knows that any flag can have a failed breakout. So, right, so you have market is going up there, everybody's still long. The smart bulls actually taking profit here and expecting a deeper pullback before it goes their way. All right, so what do we need here? We're still on the high 2. Say this is the new high. High 1, high 2 is they're looking for a bull bar taking out the bar 54 high and start to extend higher. Start to extend higher. So bulls need to get a follow through. The only way to do that is to get above 54 high and close a bull bar. So the breakout was weak this morning, and it turned into this trading range, but it's kind of trending trading range, right? So if you are to find your, all right, how would you do it? I would do it this way. Connect the lows, connect the highs. So that's a better fit, right? So we had a breakout target met, came back down, right? Found buyers, came back to the midpoint. We are hovering, and get rid of this, we are hovering at the midpoint. So if the bulls are here, we want to see a breakout back up to this high and to here. So what if you say, but Rose, I don't measure it that way. Okay, how would you measure it? Then maybe connect that, right? Then you're looking for is market to get above the midpoint of the trading range and then test the channel high. And you can see why I would not have bought that bar 53. It was already a breakout and profit-taking bar at the same time. Okay, and leg in a trading range, it's very difficult. So no matter what method I'm using, even if I combine them all, it's just that bar 53 is a bar that many bears see it as a setup to trap the bulls. So what they do is they try to sell it. Here's a first, here's second. But if they cannot close, if the bears cannot close the gap, bulls will buy again. So most of the time, people lose their trades that was going in their way one point. They lose it because they don't understand or differentiate what is a profit-taking bar, or which one is a signal bar, which one is a trigger bar, which one is where do I take profit. Sometimes on S&P, you get one bar being a signal, trigger, and profit taken all at the same time, such as bar 53. And because it activates the high 2 buys above is 52, right? And became a breakout bar, so triggered, signal, trigger, and profit taken at the same time. Why is it profit taken? Well, because of the location and the setup. You're in a trading range, you're testing the trading range highs. Everybody knows, every bear machine knows that they can sell the close and scalp. If the scalping is weak, that means they're not able to take out the midpoint of 53, then bulls take over. But many people go in with such big, trading lots, like somebody buys 10 contracts there, and it goes half the size, the range of the bar against them. Now, everything they have made in their other trades or previous trades, they lose everything. So this is why if you think that you're buying too high, just minimize the losses, because it's already telling you your stop should be down here. What business do you have buying with so many contracts at the top of a trading range when it's obvious it's going to go against you? So, okay, you learn all of this as you watch L. Brooks's past recordings. You're going to see him explain why this bar presents a danger, okay, for bulls. And you just learn. Eventually it could break out, but how would you know that? Well, first of all, this is not all that great. Sometimes when bears sell, they take out the 50% of 53, bar 53 very quickly. Then the next bar is not a bull bar. In fact, it could be a bear bar and sell, right? So like this right there. Look, this is a big bar, right? It's not a trading range, but imagine, right? So here's the big bear bar. Bulls bought underneath and tried to fix, but that's all they could do, and then it sold. Right? Here is another one, right? You're in a trading range. You're in a trading range, big bar, right? Bear sold the close of that bar with 27. Not a good close, but they have taken out more than half the bar. So most likely the next bar is going to be a bear bar. Problem here is that the first bar was not all that great close. Second bar tried to compensate, but the bulls showed up anyway, so those bulls buy because they were stuck here. They bought the close. They break even before it comes back down again. So you can learn all of this, but you have to study the charts and the bars, how they behave, right? So for example, look at bar 54. I will not have both the close of 53. But then something else is signaling me. These bears are not all that strong. Machines are doing what they're programmed to do. Okay, is in a trading range, sell a strong bull close, bet against the market. They did that, but they were not able to bring the market at one go to the midpoint of this big bull bar. They try to compensate. Where is the second bear bar? It's not there. So now bulls are like, okay, bears are not in it, and they're being squeezed out of the market. Now we can buy. So what they do is, now that's a high one. They're trying to get a high 2, so they will put buy stop orders above 56 and wait to get filled for a breakout. That was a mouthful to say, but you can repeat what I said and you'll know. So now you have a expanding, I don't know, is it kind of an expanding triangle bull flag with an apex here. So if you put a buy stop order, you want bulls to block the bears and prevent breaking this apex of the triangle. And if they do that, then they're going to come and fill you, and they can go and test above, and you would make money. So bears didn't show us strength there, right? It failed. So now bulls are buying. They started to buy at the mid-level because they saw bar 55 did not close a bear bar. So that's weakness number one for bears. Immediately, bulls started to buy at the 50% of this big breakout bar, but it's a breakout inside the range. It's not an outside. So, but they could not close a strong bar to take out the highs, but they are showing us some kind of a signal that bulls might be coming in. So that's limit bulls entering with 55 and 56. Stop bulls are parked right above. They're waiting to get filled. Bears who sold underneath with a stop order, disappointed with these two bars and dojis. So dojis are trading range bars in their own rights. So they're selling above, right? When the market gets there and breaking even. If they can get out of the market, we can squeeze those bears out. We might be able to break out to the upside, but that hasn't happened yet. So you're basically safe waiting with a stop order above 56. And if the bears started to get strong, then you can cancel it. Now, how would is there a strength for bears here? No. They started to sell here, but it was a break even. If this bar, 56, were to close with a bear body, then this would have already come down here, and the next bar would have been bear bar. We would have tested this area and closed this inefficiency, okay? But because bar 56 is not a bear bar, it's going sideways. Like this. If there were sellers here, which kind of they were, but the bar closed bullish. So selling has no strength. Goes sideways, up and down, up and down. So it's two-sided trading. Look at this one. They start to sell above this bull bar. That's good. And they close the bear bar. So now this is going to come down, and it's going to be a strong bear leg down or two, right? One or two legs down. Even though you got a bull bar there, because this was a strong bar, bulls got stuck there. They were buying above that bar, but that's high one. You don't buy a high one. Bears closing a bear bar like that, saying, hey, we're already selling. You are buying into something we're selling. We'll give you an attempt to fix it, but better get out because we want this. We're going to sell it. If bar 17 was a bull close, then if you sold it, you needed to exit out. It won't go down this much. So it's not going very fast down. That's because of bar 56. It closed bullish. Should have closed bearish. So now bulls know that there's no strength there, so they're parking their buy stops order above, because once you enter with a limit order and then the stop orders start to activate, that becomes a swing. But until it sets up, it's a sideways market. Once you start to see all of this, I think the bar by bar reading is the holy grail of being able to trade anything. Anybody says otherwise, they can read anything on a printed chart. Look, anyone can be a chartist. I see these charts, which is great exercise. People, post these charts at the end of the day after the market close. Hey, look at my chart. I filled it up with all sorts of L. Brooks, terminology and this and that. That's great. You're studying that. That's wonderful. But we don't know how you're trading. So, but if you're able to do that exercise, I guarantee you are on your way to become a really good trader. So what I would recommend you at the end of every day, take the chart and mark it up, okay? Just like we're doing that on the blog. And learn about all this, because as you look at it every day systematically, even a printed chart, you'll start to see the commonalities, like things are happening over and over and over, okay? But other people who trade, different methods, and they only look for one pattern or two patterns to happen, they only take one or two trades, but the rest of the chart, they're confused. They cannot trade any of this. I think a good trader is a trader who can read bars and the bar sequences. So bar by bar reading is the holy grail of trading, in my opinion. So get good at and get comfortable with the bars. So what's happening to bulls here, right? Well, the high 2 has not yet set up, and we took out that low. So if you put a buy stop above 56, you were safe. You never got filled into trade. So you lose nothing, even if the bears bring it down. But because this bar who sold above 55 is not a bear close, I don't know how far this selling is going to go. So if you're selling this, they can also trap you. Bulls can trap you. For bears, bar 57, even though it's a doji, is the second sell from the high. So it's actually a good entry below that, but it is a doji. Its body did not close beyond its midpoint. So, and you're selling into a very strong gap bar. So I don't know how far this is going to go. Would I take that trade? Probably not. Yes, because these bulls were buying down here trying to break even. But it's also break even set up for them. So second entry with 57 still happening for bears. but I didn't sell underneath 57. Now, when would I sell it? If bar 58 really closes strongly bearish, I might put a sell order underneath, but it would make me nervous selling into this. So I would look for probably a 1-point scalp and have a runner. I would try to bank that 1-point scalp. But I would wait for 58 to close first. Because if they do close it strongly bearish and it's not a wick close, wick is basically alert you that this was so strong, this gap, that immediately buying began. But if the bar 58 closes with a strong bear body, then they didn't hit a buy order yet. Okay, so chances are I can sell under it or to close and then make a couple of points. But once you start to get bear bars with large wicks underneath them, it's basically telling you that they hit a buy order, block of buy orders that's strong enough to push that body and close it high. Okay, so that's the one I do not sell. Decent close 58, so probably sell orders underneath. They already sold the close of 58, and they're already making a point there, right? So if you sold the close, that's 93.25. It has to go to 92 to give you 5 ticks. It went to 92.25, but did not give you 5 ticks. It has to go 1 tick under to give you 1 point. 92.25, but did not give you 5 ticks. It has to go 1 tick under to give you 1 point. And in fact, there's also is up on this, down on this, up, down, up, down. So you have a wedge bull flag. So because of the 56, I don't trust the bears here. I didn't sell. But technically, from under 57, that's a second entry short. So the bears are still trying to make money. Now, anybody put their buy stop order above 56, they see that the bears actually minimum made money, 1 or 2 points underneath 57. They start to trail their buy stop order above these bear bars. So their buy stop is now above 58. I don't like to do that if the bars are too strong for bears. But that's how they are looking to get in. So the buy order is now stacked above 58 high, 1 tick above. They count 3 legs, micro legs, so they see that this is a possible bull flag. If they get a bull bar here, it is possible that that they can actually start to enter the market long above 58. Another reason, look what happened here. If this was your channel, I said, what do the bulls need? When would I buy it? I said, I would like to see bulls actually take out this midpoint of the channel and close a bull bar. So putting a buy stop order there, you're safe. I never got it, but I also missed my chance to sell with the second sell, right? So, but I will never sell. I don't care if this comes down due to bar 56, because the moment I sell, it could just reverse right back up. So if bulls were to close above, I would have buying every bull bar that closed and targets this high and then that high. Just filtering the trades. You know, you don't have to take every trade. You can simply count the second entries and make money. Like I can count them for you since 9:30. Open. Open. I think that's what I'm going to do. At the end of the day today, I'm going to actually count those second entry long and shorts and mark them. All right, so the buy stop orders now moved above 59 and the bulls already entered. So you would enter 94.25 and you're looking for 95.50 to be tested. So you enter 94.25, you want 95.50. We could not go there yet. That'd be your 1 point solid scalp. Leg 1, pull back, leg 2, pull back, leg 3. Now, officially. 2 bear bars. I don't like to enter against them. So I'm still flat. I didn't do anything. Anybody sold underneath 58, disappointed with 59, sold above it and made money. We're trying to close the gap, but it's still open. So you got a now much better bull flag. So second entry with 57 low is still, bears are still making money. Really nice close. Bar 60 is, if you do sell underneath, you're targeting the channel line here. Sorry, was I? Okay, I was on mute. Sorry, let me repeat what I did there. Is I did not sell underneath 57 because of this bar. I wanted to be bullish, bearish bar. It didn't happen. So I thought that because of this gap, it's probably weak. But then bears closed the second bar. Okay, so what can I do? I can sell underneath, but it's got a wick. It's probably going to go up. It's going to go against me. I'm looking for a close like this. Okay, that's what I want. And I wanted it to be up here. It didn't happen. When I'm nervous about these big gaps, even though in trading ranges, the gaps close, that's what you should be expecting. But this is a trending trading range, and they may not be able to close this one. So, but once I saw the bears are still selling and then they closed bar 60, I bought it. Okay, I'm sorry, I sold it. I sold one tick underneath 60 and my target was that channel line, okay, lower channel line. And I took profit there, okay, because there could be buyers waiting there and they could reverse it back up because this is a trending trading range, okay, kind of upwards. So basically, trading range lows is right here. Lows is right here. Okay. So there was a trade for me, but it was kind of a late entry with the third leg down, but it presented a really good close. I just couldn't say no to it. So bar 60 is where I sold. D is where I sold. Okay, so market is now in a swing. It ended up becoming is 1, 2, 3 wedge top. I'm going to get rid of this. You can hold this if bears are selling here. We close a bear bar. This is where they're going to try to come down to. This is the 25% breakout extension. That's 50 and that's measured move. But I need to see a bear bar close. So gaps closed. Bears are now looking for a double top neckline 51. They want to take out the neckline 51, but they need to start closing bear bars. I already took profit at the channel line. Well, we have been in, this is to me is kind of a consolidation. It's just not, I'm worried about these swings cutting short. And if I sell right now, they could trap me right here. It's still the trading range lows. But there's also not a good buy signal bar. So the bears probably sold below 57 holding. And that was, so they got about 5 points there. If they close that bear bar bearish, it's going to go further down. It is possible that it could go to 9 points or 10 points, and 10 is right around the extension target, breakout extension. So we need, excuse me, we need a bear bar closing below 5 points, which is right there. And that would be the signal that they're going to swing into here or continue selling. And if they fail, if the bears fail to close that bear bar, bulls will pick up. Okay, so they did close. They closed the 62, bearish. So now they're looking to see if they can actually sell into 10 points. But there's one thing that's happening here is that's if you measure from 57 low. I measure from here. So that means we're already at the 10 points. And there is a chance that this is going to go against you if you sell one tick underneath 62. Okay? But they didn't fill you. If your sell order is one tick underneath 62, even if this breaks, just bounces, you did not enter the trade, right? So why is it bouncing? Because you're at a 10-point take profit zone. So you have to allow that bounce. So how would you sell this? From underneath 57, that was a scalp into the trading range lows, but you're looking for a swing, right? But the breakout could fail. But say you did sell and you're expecting that to reach here. You have to put a sell stop order underneath so it's safer. Even if it goes against you, you have not entered a trade from under 62. You're just waiting to get filled. So that's the only way I would put a sell order there. Because these bears already sold, reached 10 point, taking profit. And their 10 point was calculated from the pivotal level, which is above 54 high. So you have to also think of that this is definitely a trading range low and they're ready to trap you because breakouts from the edges fail. So if you were smart and you instead bought it, you made a lot of money. So where is the breakout? Well, one thing that did happen, even though this was a weakness, okay, bears sold, but there's no breakout. So now anybody, okay, who was still long, maybe they bought the 57 and got trapped. So they waited for market to reach the trading range lows and then they bought it, so they're breaking even now with that bar. But if you were smart and you play at the edges or the mid-level, right, here is the second sell from the mid line of the channel, that's a good sell. I didn't take it, but I did buy that. I sold here and then I put a sell order there. Then I started to see this going up, canceled, bought it, and then right around here where they got trapped, I took profit. That's it. Because I'm in a trading range, I'm not expecting a swing. My job is to take profit. So if you are a bull, right, so we have a ledge now. Market wants to probably come down and test one tick underneath this ledge. Market went 5 points, is 5 points right there. You see why I scalped? I scalped actually one tick before 5 points. So it went higher, which was kind of bad, but I don't like it when it does that, but it doesn't matter. That means, you know, I'm not really leaving anything on the table because I'm sticking to the rules. Scalp is a scalp, that's a 5 point, and I got it. Sometimes you only get a 2-3 points, like 225, 325, sometimes it goes 375, like between the 2 and the 3 point, and then immediately reverses and takes out that prior low. That means it wants to keep going down to the swing targets. But if it goes 5 points, okay, they can create a swing. It's just that my job is to take profit there at the 5 point. So it's somewhere around 475, 4 points and 3/4. I scalp. Right? That's what I did is right there. So, and you can see that people actually bought, is trapped, bought down there, break even. So I have to take profit. We have a ledge here, 3 identical bottoms, 61, 62, and 63. Market will eventually come down and test 1 tick below that. So look what happened here. We have, right, you divide this. This is quarter, 50, another quarter. So that's 25 inside. That's 50. Right, so that's 0. That's 75, 3/4, and 100. Pull back to the 25%. They found sellers there. So where's it going? To the ledge. But where's it going to break out? Probably here. That is minus 25%. So the bears want this. You see why I took profit there? Came back. This is where they're going to tag now. You better take profit there. Here, scalp it. If you sold there. If you master the channel trading, it's actually a lot of fun to trade with channels. I divide it into quarters and I add quarter breakout targets. So that is the target. So what happened to bulls? They got a 5 point from the pivotal level, if you count, and they exit out. So it couldn't close beyond 5 point to get to 10 point. So that means we're going to go back and test that low, and it's possible that we can actually break and continue down. But when you're using channels, you got to make sure you're measuring right. You're drawing your channel correctly. Because if you don't, none of this will work. Like if I were to connect, we already met that. See? We already met that target. Then this was the correct way of measuring. We went even 1 tick below to give everybody their target. Now we're reversing back up. I don't know. They have to close this bar closer to that line, red line, to go to the half, the 50% extension. So when you're doing this, you can use the extremes, but problem here is that these are trend lines and you want to connect as many dots possible. If you didn't, then you're taking the extremes. So 1, 2, and then this, you're still expecting market to come down to here. Yeah, I mean, you can use these levels as buy. As it comes down, it takes profit, bounces, you make money. But it's not guaranteeing you're going to get a full reversal. Market, because it's a trading range now, turned into trading range, market is trying to get to the open of the day. It becomes a magnet, okay? That's where they're trying to reach. So we take out this low, then this becomes obsolete, right? So bears are, I'm going to remove it, not necessary to have this anymore. So bears are still selling into here. Sometimes I do it twice. So just to be sure, connecting. So we're in leg 3, okay? Leg 1, pull back, leg 2, pull back, leg 3. Machines draw the channels or trend lines differently. Not every machine, do the same thing. So some see this as the target, and which they haven't reached, so they're still trying to push towards it. Open of the day is magnet. There's a gap here. They're trying to close that from the morning. Tiny little. Or you can say, I'm going to measure it this way. That's the last bare body. The whole thing is a gap. Bare body, the whole thing is a gap. There's a 2R from this range breakouts that bears haven't reached, left it behind, so they might be trying to get there. This area is a buy zone. Any bull with 63 boat, their stop is possibly 81.50 or 81.75 area, somewhere down here. So they're kind of in a pain trade. So 81.50 to 81.50 area is their stop. They bought it and they're trapped. Outside bar, inside bar, 64 outside, 65 inside. So you got it also. That's bar 65 closed really nicely. They're probably buy stop orders above it. Where do the bulls are trying to take it? Since their stop is somewhere here, 81, right? They're trying to bring it back to where they entered, which was the first entry above 62. So they're trying to reach the 62, either the open of 62. I wouldn't say open. I would think of market trying to go there because that's where they were trailing. Buy stop orders, they entered, they got stuck. So they got a white stop, okay, because the trading range. They got a white stop. So they're looking to get back to the 62 high again. So since we took out this low, we didn't take this one out. You can count as this the first entry above 65. Bulls are going to look for a second entry. Mini bull above 65. And if you did buy, you would enter 52.89. It needs to go 90 and a quarter to give you 1 point. It went to 90 and it didn't give you 1 point. So that is not a good trade. That is a perfect scalp, but it's not retail scalp. You need 5 ticks to make money. All you made was 4 ticks, and therefore it sold quickly. But bulls still have a white stop. They're looking for a second entry long to reverse this back up probably. So I'm going to remove these because I don't care. I wanted to show you how I trade them. So if you buy 1 tick above, because you have 3 legs down, right? And you get filled in 89 and then 90. It needed to go to 90 and a quarter to give you 1 point. So it failed. Bulls need another bull close here. They're stuck above 62. Could this be a one big reversal? Yeah. Bulls can actually show up, but I don't know if we have trapped the bears yet. I'm not ready to buy. In fact, I actually want to find this chart in Encyclopedia. I'm not ready to buy. I want to see is bears getting trapped well enough before I buy into that. Because then market will move so fast that I will be making a lot more faster points. So this is a bear flag, right? But difficult to sell, right? It's just you're at the bottom, kind of at the bottom of a trading range. Bear flags fail at the bottom of a trading range. Bull flags fail at the top of a trading range. Bull flag failed. Bull flag failed. Bear flag failed. Another one, possibly. Let's see if this fails too. So bulls are looking for a second entry long. Here's is trading range day after a brief is bull trend, right? And then market formed this is and then got this. So right. Brief bull trend is comes down with several legs and goes back up. We could not take out the high. This one also didn't take out the high. Is tried again, came back. This one is basically closing, going one more time above the EMA and closing around the EMA. Maybe this is right here. I doubt it. This one is right here. Is this? Then comes down. Is then goes up. Fails. But we took out this low. They didn't. So therefore they stayed sideways and above the EMA. Okay, here we go. So here's a trading range day, is brief but weak, is bull trend, right? So comes down and tests a high, double top. Double top is comes down with a couple of legs. This one's the 3 legs. So here's a leg 1, leg 2, maybe the 3rd leg. Then the bull trend, small pullback bull trend starts. We don't have too much time left, but 3 o'clock is a good time that a trend can begin again. So we have several legs down. Leg 1, pull back. Leg 2, pull back. And leg 3 is sideways, inside, outside bar, inside bar. Is that outside? Oh yeah, OIO. So we have a breakout mode here. We can get that. So we have a similar thing here. Look at that. Outside bar, inside bar. Then a bull gets another one. They buy the first pullback. It's a small pullback bull trend towards the end of the day. So now we could get that possibly and get above the EMA, test these. That would be. This could also break out. I would love to see that one. So can we get a nice breakout? I want to see markets go and test the bar 64 highs and get a breakout from there. What about closing at the EMA today? It's possible. but we have plenty of time for a nice bullish breakout. What about bears? Can we break out bearish? We are below the EMA, but we're not getting, and we're still above the open of the day. So, and there's a gap open here. I don't want to sell because I could get trapped very quickly. Okay, so a trading range. Okay, TR open, brief breakout to the EMA, comes back down, makes higher low. We do not take out that low. Higher low, higher low. We come in, okay, take out these 1, 2, 3. We didn't even take that out. Look, we did not make a new low to take these lows out. So it's even more bullish. And then we get this. We make a new high. Finally, we take out these highs. We make a new high. And then everybody else is buying. It comes back and closes at and around the EMA. So we could get this. I like this better. Because that was a double top neckline. Double top neckline extended down. Well, briefly it did. And then now it's trying to reverse. But I need strong closes. I need back-to-back good close, bull bars. I want bar 64 high to be taken out. So I think I'm going to buy one contract just to keep risk small. So I entered with one contract. I went long, only one contract. I will look to see how bulls will behave at the high of 64, because any failure and we'll pull back is not good. But it's bulls entered one tick above inside bar 65, disappointed with 66, bought again, closed the bull bar. They need another bull bar. So they need another bull close with 68. If they get it, that's going to be a good sign for bulls. Then we can go and test the 64 high. So I'm testing the waters with only one contract to keep the risk small. I can always fix it because it's a trading range. But if I enter with multiple contracts and turns on me, that's going to be difficult. That I will be forced to take a loss. It's a bear flag. It's right there. Up on this, down this, up, down, up. That's a wedge bear flag right there. So in order for this to reverse, bulls need to deny a breakout from this bear flag at the bottom of trading range. But we're not all the way at the bottom, so this has still a chance to break down. So there's still room for bears to make money, but only to get trapped, possibly. I'm looking at the options for trading range day with late bull trend breakout or bull breakout options. That's what I'm looking at right now. To see if I can grab something that looks like today's chart. Look, here's one. But we have to prevent these lows to be taken out. So we need to squeeze out the bears, and we're not squeezing anybody out. So that's not good. So I have a white stop. My stop is around 81.50. And 1, 2, 3, 4. Bears see this as a target. They want to come down and test it. That's their projected target. Gap is still open. This is the last chance I'm giving bulls. As long as this is kept open, could be also if anybody. I'm going to do that. That's it. Now, how do I measure this? Well, there's a impulsive move, pull back, another move, pull back. As long as this pullback low is not lower than this, this is the final, and the bulls could not get above, so they're in a rush to sell. So I connect from there to there is a projected target, but that's the second target. The first target is the horizontal target, which we have tested. And we're not really closing below that. So whichever comes first, if you sold right there, you have to take profit. So this is why I'm not exiting my long. In fact, if this bar closes strongly bullish, I'm going to add to it. Bulls got trapped where I bought. They trapped me with bar 68. Okay, so many bulls will buy again and they break even. So I'm back to break even now, but any good bull bar is going to be a trap for bears also. And I could get a nice trend start. So the target is the high of 63 or as early as 64. That's the last leg down. Trap of the bears, outside up bar. I would love an outside up bar here with a good close and then more bulls to come in. So I'm back to making money again. Well, that's why, okay, so Roger says your tolerance is so much stronger than mine, but that it's because I only entered with one contract. If I see more bulls stacking up, I'm going to be adding more contracts, scalping, adding towards these highs, right? But I needed to see that if I were to enter above 67 thinking, okay, we moved below the 67, now we're getting above the 67. I looked for a bull close. I didn't get it, and they trapped me. But I can only tolerate it with small amounts of contracts, right? So it makes me feel, or even if I lose something, it's just going to be a couple of $100. I don't need to worry about that. So, but if I were to be in there with 5 contracts, 10 contracts, 3 contracts, that'd be too much. So the only way to tolerate something in doses, right? Small doses, small contracts, small lots. Okay, so we're testing where they started to sell with the third leg. Well, they started to sell up here, but that's the first bear bar, 64. So I said we're going to test above it. We did. It's stalling there because, some machines consider the starting point of the third leg is the high of 64. So these bulls bought down here taking profit there. Okay, that's why we're stalling. But we got a really beautiful outside up bar. So I like to see actually bulls do better here and go and test the 63 high. So if you look at here, now you're going to see another three-legged wedge, right? So here is down, up, or wait a minute. Okay. So if I connect, pull back, starting point, ending point, and so that right there is the horizontal target for bulls and the projected target for bulls. There's nothing here to have a double top. We have to reach up here to make a double top. So it looks like 93.75 is where I should be scalping. This is not a good double top. So I would expect to go up a little bit. Maybe like that would be a much better double top. So I'm expecting bulls to push this up a little bit more. Some will say it's a double top with 64 high, so they expect market to come down. I'm looking for a bull close and a test of 93.75. But not a good follow through 70. That makes me nervous. So I am waiting. Here we go. I'm scalping 93.50. I'm one tick underneath that 93.75. Hopefully I will get it. I should not be denied my reward. I'm at 93.50, but I did not sculpt anything yet. Here we go. Oh my God, it's beautiful. You guys, is anyone in this with me? Please tell me you guys bought something. I mean, look at that. That was a good outside up bar. I was already entered here. My stop was far away. It's beautiful. I said we're probably going to test there. Took profit. We could get a follow through. I hope we can. Next target is the projected line. So it's a late bull trend, possibly late bull trend. We might be getting this, but only towards the prior highs. So anyone's cashing in here. How you guys doing? Yeah, 2 micros. Hey, micros are great. Green is green, right? Lorenz is like, I am making money here. Excellent. Let's hope that we can get to this target line now. Low of yesterday-ish. But I would be so happy if we can actually break out and get to the magnet, which is right there. That would be even more phenomenal. That would be wonderful. But hey, I scalped a tremendous amount. I actually added 2 more contracts as this was going up. So what I have done is I put a buy stop order 69. I put a buy stop order is 70. Filled, and then it started to compound because then I have 3 contracts. I scalped 2. I'm still holding 1, hoping we would get a really nice breakout here. So that would be a late breakout in the day. So hopefully we'll get that. But, it's been a trading range day. It's persistent. But late days, we get either late breakouts or bullish breakout or late bearish breakout. In this case, I think it's the late in the day bullish breakout. Sometimes breakouts fail, okay, and then we go back and close near the EMA. But so far, it's okay. We have a small internal measured move target there, so I like to see that tested now. And it's right around my projected target anyhow. So if the breakout fails, we could reverse back to the EMA, but it looks like it's going where it's supposed to go. So that's my measured move target. So that's what I want. Ted is in Arizona. Bob is in NMC19 scalp. 2 ticks. I don't know. Oh, so you scalp over there. Okay. 2 ticks is $25. I'll bank that. Amy's in. Gentleman is in. My gosh. Roger, what about you? What'd you do? Matthew, Andrew, Husky is in. CAQ with 2 micros. I like that. That's like, you can't be any careful, right? Any more careful. JPFX goes that long. Let's go. You can tell that people have been waiting for this. Andrew, KT is in. Zane Hunt is making flips and stuff, so that means he already made money. Roger chickened out. It happens. D31 was in but came out 52.86.5 is 52.80. What? Oh, you were in and then you just got spooked and exit out? Well, why didn't you enter above outside up bar? that is a failed bear flag at the low of a trading range. I said flags can fail, although this one had a room, but bulls were adamant to keep the gap open. So this right here is a failed bear flag. And the signal now and trigger, so you could have gone long again. So next time you'll catch this if you see it. What else? Could this be the buy to close rally until, I don't know, nobody knows the future. In order for this to become buy to, I mean, look at the first bar after a strong signal, right? Signal. The trigger bar is very poopy. The right word, bar 7D, right? So it should have been a bull bar. So what I'm trying to say is that the buy to close didn't start all that well. So I don't know how far this is going to go. As far as I'm concerned, it's probably going to the prior high. So I have a projected target and a measured move target. If we start to take out these highs, okay, then yes, expect market to get to the magnet, at least closer to it. But it didn't have a good start to begin with. So it could fail right around here and come back down to the EMA. But there's plenty of time in the day for market to actually get a nice breakout and perhaps go further up. So far, so good. Okay, so it's not bad. Okay, got my next target. Both of them. Excellent. Is now let's see if we can get a nice breakout for bulls here. Exactly. So be prepared, trading range. Breakouts could fail. We have slides for this, all arranged. Trading range day, bull breakout late in the day, or bear breakout, or failed breakouts. And generally they fail around here. So you should have scalped here. Okay, even if you entered late with 71, you would have still made money. Why? Because the first target, okay, right there, we closed above it with 71 body. So it's telling you it's going to get to the next one. So you could have entered there and made money. I've scalped here because you're testing the trading range highs. So what happens to trading range? You guys know this. How many legs do we count in a trading range before we look for a breakout? What is the criteria? 3. 3 for the bulls and 3 for the bears. Thank you. So how many do we have? Well, let's see. Trading range started here. This was a bullish move. So trading range started here. Here's a 1 leg for bears, 1 leg for bulls, 1 leg for bears, 2nd leg for bulls, 3rd leg for bears, and a 3rd leg for bulls. So what do? You always expect. What do you do? What do you expect now? All right, so we counted our legs. Leg 1 for bears, leg 2, leg 3. Leg 1 for bulls, leg 2, leg 3. Now, what is market doing? Where is it going to test? You guys know this. What do I need to see to be tested? The first, okay. No. EMA maybe, but the 50% we'll see got this. Thank you. So the midpoint, he's trying to NMC 19 trying to say midpoint. It's the midpoint of the trading range. So if you take the trading range, right? So this is the trading range. 50% is right there, right? So that's what I'm looking for. And Jonesy is correct, EMA, because EMA is right around there as well. Fair price. So we just came back to it. We might move underneath, right? But what you don't want to see is that the bear bar is closing below the 50%, right? So if we start to close, get rid of this. If we start to close below the 50%, we could then go test the lows and get a breakout late in the day. So, but if we stay above the 50% after the test, then you're going to look for bull bars. So market will show you that. You just have to be patient. This is why I took profit there, because bears can move the market underneath EMA, come down here and start to get a bear breakout. Why? Because think of it, right? So market was up and then came down up again, right? And this could be the fourth leg and the fifth wave. I'm counting waves. So here is 1 to 2 correction, 3 to 4 is, and fifth. And when the fifth one fails to get above 3, bears could be in a rush to sell this. So what do you need? You can measure you could just connect the dots. So suddenly we start to move underneath the 50% with bear bars, you're going to expect market to come down to here. But we're just stopped at the 50%. So that's not given. We could still break out to the up, but we need to see bears to be trapped underneath the EMA and bulls to take over and keep us above the 50%. So this is where I read the conditions like a hawk, and I won't take a trade until I see it. Okay, so Roger grabbed some points. Oh, I'm happy to hear that because it was such a good. I mean, you should be able to grab at least 2 points from this. But if you let it go, that's okay. Don't feel bad. You let it go. Next time, print this page and study it. I think the market is going to try to get a breakout. So the first target is 52.9950. Okay. 52.9950. See if we can get there. The next breakout target is 53.07 or 08. We'll actually get a breakout here. And I want to see 53, like 0750 or possibly like 08, 09 area tested. I'm still holding because I bought down at the EMA and I'm looking for, it was a fair price, like I said earlier, a good place to buy, or at the 50%. So I want to scalp around 99.25, 99.50, and I want to leave a runner is into, I don't know, sky is the limit. It might even go to 53.16. Remember I said 53.16 we could go and test. But I'm more interested in 09. You're moving next door. Well, I'm trying to get out of New Jersey, so I prefer to move down to you, Roger. It's nice and warm down there. Let's go. Come on, bulls. Just break out already. So this is good. I'm thinking maybe I can measure this leg. Not all that great, but we can reach there. See, it's closer to that 9. I talked about 53.09. It's only like 3 ticks away from my target. So come on, bulls. And that's the measured move target. There's plenty of time for market to break out and make a good move for us. Hopefully they will. But these trading range highs are so pesky. Bears trying to prevent the breakouts, but they might be a little late here. So I'm still expecting is 99.50 and higher at the minimum. At least we should get the 99.50. Slightly above bar 14. Or you can also measure if this is your trading range. I'm going to use this. Nope. Yeah, that one. So here's your first breakout, second breakout, and let's see if we can actually get this one, 53.0250. I don't know. We have yet to break out. there's no breakout, which is kind of a bummer. But let's just keep the faith here. There's still 19 minutes for bulls to make some kind of a move here. What about bears? Can they actually reverse it back all the way to the EMA? If we fail to break out, that's a late in the day failed bull breakout. Could end up at and below the EMA. So watch out for that. Low of yesterday is still holding, but let's just wait how this bar closes. I don't like the way it is at the moment, this bar. It's double top neckline. Bears already piling under 73. They might have moved their sell stop underneath 74. They're looking to get filled, and they're looking for market to move underneath the EMA once more. They might get it, and I'm kind of bummed that we couldn't get the breakout going. So if they're not going to break out, then they have to show me. That means we need to close a really strong bear bar here. If this bar, inside bar, 75, closes weak bearish last second, there's still 1 minute and 40 seconds, then we're going to get a breakout for bulls. So I still think that the bulls are still trying to get the 99.50, possibly is even 09, 53.09, so 52.99.50, but it's just very difficult. Bears want to sell and go down and test the 69 lows or 69 open or 68 high. Hopefully we don't get a 2-bar reversal here to start that kind of a sell, but it could happen. It could be the failed breakout late in the day. So we have failed breakouts to the upside, failed breakouts to the downside. If the bears get 2 bear bars, consecutive bear closes, they're going to sell under the second bear bar, put a stop above this bear bar, and then they're going to swing. See, that's something you don't want. And they seem to be getting stronger here, but this bar hasn't closed. So anybody who went long and stuck with bar 74, buying again at the EMA, trying to get a break even. Bar 75 did not close all that weak. It's actually pretty strong, but the bulls buying and trying to break even. Now, I don't know how this bar is going to close. We either reject this bar and go close a strong bull bar and break out, but that's becoming more unlikely, or we give them a break even, these bulls, okay, and then start to sell into the bar 68 highs and bar 69 open. So it's a bummer. It's kind of failing, but with bar 76, that's when these institutions come in, okay, and institutions can actually sell this. Watch out. So the close of bar 76 is going to be epic. I exited my long because with the close of bar 76, a lot can happen. We could suddenly come down to here. I was long and I exited. I just didn't want to take the risk. I just didn't want to take the risk. Because market probably is trying to come down and test the 68 high. Could even come down and test the 88.75 or 87.75. Yeah, I'm bummed out. I was really going for a 99.50, but I'm done. Now, can we actually trap the bulls underneath? If they do, that's going to be institutions. That's fine. But they have to show me that they can trap them. This was too much for me. This is an outside down bar. Even though it's high, it's not higher than the prior bull bar. But to me, look where it started and opened. Look where it closed. It did not close weak bearish for me to say I'm going to go to my targets. This is a failed breakout late in the day. Probably market is trying to come back down here, test somewhere here, and then close below EMA. So I exited, and what you could have done, you could have sold underneath or the close, although you're selling too close to the EMA, but there's still a couple of points to made there, okay? So I think the bears now want to test 88.75 to 87.75 area. But I'm flat right now, and I don't want to touch this because when this bar closes, a lot of weird things are going to happen very fast. In fact, there will be volatility injected into the market by institutions, so I don't want to be in that. I want to see what they're doing and then go with them. But if you are short, if you did sell 75, close or under, your target is basically what you count as points, either 9 points profit taking at 88.75 or the 10 points solid at 87.75. I try to exit out of the market with either a small loss or small win before bar 76 closes. Now, I think the bar 76 is going to give bears a 10 point here, is minimum. So you should be able to get that 88.75 to 87.75 area target. But, you know, it is what it is. It failed. Nothing I could do about it. I gave my best. Now, what about bulls? Can they actually reverse it? If they reverse it, they have to show me that they are going to trap those bears underneath the EMA. There's a small support here. That's a perfect location to do that. But first, these bears need to make their money, okay? They're not going to allow any trap until they cash in. All right, so here we go. That's it. This is the institutional bar. It came one tick close to the 9 point. It's an 8.75. That could be a trap. I don't know. But if you measure, right, from here, that's 9. See, they didn't test 9 point. That's 8.75. That's 8.75. You see that right there? Will that be a trap and the bears are not going to make money? In order for bears to make a swing money, okay, scalping starts at 9 point. They have to hit 9 point. If we start to get strong bull bars closing above EMA and suddenly accelerating up, that right there is a trap sign number 1 and the close of the bull bar sign number 2. But they came so close, they're going to get their 9 point. They might even get a 10 point, which is right there. Because it's right around is either I said they're either going to test a high of 67 or open of 69. We just test it. Now, projected target for bears is right there. So they can even accelerate into this target. So they're at the 10 point. They can accelerate 14 point. Oh my gosh, it's right there. Oh. Wow, you could have sold underneath bar 76. That would be really nice. Underneath the EMA, that would have given you at least 3 points, possibly 6 points, 5 to 6 points. So, how you guys doing over there? Hopefully you guys exited with this bar 75 if you were still long and looking for a breakout. It didn't work. But I warned you. Don't say that shouldn't warn us. I warned you, and I talked about this because someone asked that, is this a buy to close rally, end of day, can we go higher? I said, if it's a buy to close rally, it sure didn't have a good start. Think about a rally car already flipping right at the start point with the gun. So that's exactly what happened to bulls. They just tumbled right at the open, right at the gun, or whatever they call it, right? So therefore, they're not going to go further. And then you're not getting good buy to close bars. You get a double top neckline. That's the measured move down or projected target. So you could have sold, if you didn't sell underneath 75 because you're worried about the EMA, then you sell underneath 76, and the bears got it. So, wow, look at that. We're almost there, 14 points. Can it get a 20-point swing? Well, open of the day is now target, and if we can push this, possibly 19 to 20, bears can get that. 20 is right there, but I don't know. This you should pay yourself with the tagging of this projected line, and then either leave a runner for 20 point or exit out because there's not much time left. And this is now another leg in a trading range. But know what's happening here. We're getting a breakout from the trading range. What is it happening here? Who's going to tell me? We came down and tested the midpoint of the trading range. Now we're closing bear bars. So they can actually get a brief breakout. And that could get us to the 20 point. Yeah, it's vacuuming down. But it's really getting a breakout now. All right, so I did sell into this, and I took profit. It actually went one tick below of the projected target. I'll be right back. If you take a look at this whole situation, you have failed breakouts, right? Failure over failure is a swing. What does that mean? Remember I said if we start to get 2 consecutive bull bars, here's another example why swing failed for bulls. You got a failure, right, of a failure. If you bought, this is not 2 consecutive. This is a good bar and a doji. But if this was, bar 70, was a bull close, then entry there, stop here, you would get a 1R, you would get a 2R, okay? Maybe even 3R. But right there, that put a kibosh on everything. So now bears took it. So now you have is failure of a failure. Now you have 2 consecutive bear bars. You put your stop there. They already got the 1R, taking profit. They can continue to sell into 2R. And we're selling into support here, so I don't know how that's going to go. Now on the 15-minute chart, this is 1R, okay, target for bears, Asia breakout, and this is 2R. So that's where they're trying to go. So let's see where that is. That is 72.75. That's 75.50. 72.75 is right around 2.5. I don't know if we would get there. There's not much time left here. I would be careful. I would take the profit here, 1R, be done with it. Just don't push this any further. I already took profit there at the line, 1 tick above. I did sell in this. I didn't want to lose it anymore, like this opportunity to sell. So I had a little bit of, whatever I lost here with bar 75 coming down, I made money. They're still set, but this is your runner. So you should either be in a runner and with the stop at the break even. It could still come down more, right? But there's no time left, so leave it alone. And that's the bell. Okay, so let's talk bars. I'll do the quick bar by bar reading before I leave. Okay. So yesterday was a interesting day. We had a sideways market. We had a breakout and a reversal because we had more than 40 bars in a row in a tight trading range breakout. So that makes it a strong balance zone. This is where the fair price was. When market creates a strong, a tight trading range that lasts more than 40 bars, expect the breakout to fail and then go right back in again. Okay, so breakout didn't fail, got a nice breakthrough, but eventually it reversed right back in there. Okay, so market likes to snap back to these balance zones. This is where the buy and the sell orders are balanced. But yesterday we closed the bear bar, right? So market found buyers, went back up, and sold again from there. Sellers were there, but that was pre-market. Now we opened up at the lower thirds, but look where we are. They're trying to close a bear bar. If they manage to close this bar bearish enough before 5 p.m., okay, then market will continue to sell and try to get a breakout or the test of this big outside down day. So market is probably trying to test the 73.25 area, maybe even lower. So tomorrow we could sell even, or we're going to trap the bears who are trying to sell and then reverse market back up. So market is right now trying to get to last week's range low, which is right there. We're not so far from it. It's only 9 points away. We could very well sell that 9 points. I think the market is looking for 20 point. 20 is right here. So it's 77.50-ish. I don't know where that put us, 77.50. We're still above. I don't think we're going to reach there, but who knows? We might. But tomorrow, what can happen tomorrow? If we don't reach here, say we reached either 20 or 19 point and bounced before the 5 p.m. and closed the bear bar, tomorrow we could sell into here, trap the bears, and then reverse back up with a inverse head and shoulders. Because what this is what I call is a possible reversal. Okay, it comes down. It's a possible reversal with a trap pattern. So it creates some kind of an inverse head and shoulders. But first we have to trap. And that trap tomorrow could be here, and then we go, and then reverse back up. And that could be also double bottom at the EMA on the daily and reverse back up. So that's what's happening. All right. Major gap up, big gap up. Big gap down. What am I saying? Big gap down. Okay. So market is looking for some kind of a support. What I'm looking for is how far are we from the prior low? Is it 10 points, 20 points? What is it? Okay, so it's just about 15 to 20 points, but we didn't quite get there, okay, from that low. And it's a bigger trading range. We're at the low of trading range. If you look left, there is a gap here. I don't know. I've been doing this so long. You guys need to pay attention to here. Look at this. There's a gap from there to there. Or you can even say I'm going to take the gap all the way to the close, open to close. So that is 82. And look, we tested that gap and we did not close it completely, and the market reversed. So if you're wondering where that support is, your answers are in the history. So you have to go find them before market opens and be ready with your levels where market can reverse. I didn't do the streaming this morning, but I had this marked on my chart, and I look for low 1, low 2 failed, trapped the bears underneath bar 3, and the buyers started to show up there. So basically, I'm buying. Someone asked me if I would buy bar 5, close, or 1 tick above. I said no because I have is 4 bars. I'm expecting follow through, but with a pullback. So there's a 4-bar trading range at the open. There are sellers underneath 3 fail. Okay, so I'm looking to see who's selling, who's not selling. Bears try to sell once, bears try to sell twice, failed. In this pattern they actually created a expanding triangle and the bull bars are closing. That's where you buy again. So that's where I bought. But the problem here was bar 9 and bar 9 and bar 10 are showing upper wicks. Smart bears who are stuck underneath 3 actually sold these close of or underneath, I'm going to say close, of bar 10. Those are the machines because they're stuck probably here. So if you are a bear, you sold here, maybe you sold the close, you got to break even with bar 11. The reason why this bar moved down so much and did this and then went back and closed again, that was a chance to give the bears a chance to exit out. This is why I see a bar like this and there's a trading range open, right? I'm going to expect first break out the fail, try to get back to that trading range no matter what it does. And that's why if I buy small. I need to see a fixed and follow through. Now look what happened here. As this came down, market created, okay, a gap here. We tested that gap 50% and even lower, and the buyers immediately showed up. This bar closes like this. What you do is you can buy the close, you can put a stop under, so you're going for this, right? Market try to get there, kind of fail, or you can say, nah, that's not where I'm going to buy. This is the actual risk, is right here. That's your 1R. Why? Because it dipped, so the breakout. If you're looking for, because it was such a mess here. But you could see how it just went one tick above to give everybody a 1R, and then it came down, right? If you put your entry there, that's your initial risk, right? But you're not getting your target because it dipped. So really, this is breakout bar, pull back. I would measure from there if you want an accurate target. Okay, so that's your target. All right, so this is bullish now, but I'm counting legs here. So there are several legs. Leg 1, pull back. Leg 2, pull back. Leg 3. So you have a wedge and you have a wedge at the EMA most likely you're coming from down below. Most likely you have sellers at the EMA waiting. Bar 15 is a strong bear bar. Anyone who was long anyone who was short here didn't get a chance to sell this because this happened so fast. Retail traders are looking for a bear bar to sell. They got their signal 15. So anyone who's short here will sell underneath the first strong bear bar and try to get an 80% probability of break even. So they're looking for this to be tested, and look what happened. I told everybody that is the first sell. Selling will begin one tick underneath 15, but expect buyers to buy the first bear bar they see because they're stuck up here, so they get their break even. If you don't get 2 consecutive bull bars after 16 break even and a break even 2, then that's it. They're exiting out those bears, and market is giving you a second entry short. Bar 17 moved underneath 16 is the second entry short. You sell, your stop here, or if you sold here, you sell again. You need to exit out here. I posted these charts and explained to the traders on Discord. If you want to go check those out, I explain all this. And I told everyone to, when it gets here, exit out, and it goes sideways for a while. So you have a couple of double tops and a triple top and a failed bear flag. So what does market trying to do here? failed flags that means if a bear flag is failing, we must be in some kind of a trading range. And that is your trading range boundaries. So what do you expect? Look for these gaps to be closed because you're in a trading range. Bulls give you a beautiful outside up bar. You can buy above it. You can look for a 1 hour and then some. And look for the gap to be closed. Gaps closed. Test of the highs. You look for some kind of a weakness bars. Maybe a doji. Oh, look, doji, bar 42. Inside bar, reversal sign. I did say that because it's a doji, the reversal, it weakens the reversal, but it's a trading range high sell. What does the market looking for? Close some gaps. So most likely they're targeting this high right here, 33 high at the minimum. Because you have a very violent breakout and a couple of legs up, that area becomes now a buy zone. Okay, and I was trading that with you. So market did come down there, buyers showed up, leg 1, leg 2, possibly 3 legs there if you count closely, right? So let's count it. Leg 1, pull back, leg 2, 46, move underneath, 45. Pull back, leg 3. So now I'm looking for another doji and a bull bar. I've got a doji 53 and a bull bar. Bull bar is an inside bar right from the buy zone. You can buy is 1 tick above. Since this is the last low and this is the last high, that's high 1, high 2 entry. Even though this is lower than that, that's okay. You can buy above it. Your target is the prior highs. Market goes up. I have warned you right here. I said this is a leg in a trading range. Any bar is this big in a trading range is actually a trap. What does that mean? Bear machines know that they can sell the close of this bar and make money. Anybody who's buying will be trapped. So you look for bear bars. I said it's weak. I didn't like the sell. This should have been a bear bar, so I didn't sell it. And 57 was a second entry sell if I didn't sell it, but I sold here. And I stretched this, and I looked for this area to be tested once again. And in fact, not just that, but also the 50% of that area. So I keep stretching, 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 and I'm looking to see if we're going to actually take out that 50%. We failed, and we failed. Look at that. Fail, 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 fail. So now I'm looking for buyers. I said, this is another bear flag. It's going to fail. It's already showing you that buyers are entering at the 50%. So what am I looking for? Failure of a bear flag means I'm at the bottom of a trading range. I need to find my 50%, and I need to look for a test. We go and test, so these spooked bulls actually start to take profit. But it's an outside up bar. I already bought it. I took some profit, but I'm looking for more. I marked it. I'm not going to mark again. You can target the top of the trading range. That's the bottom of the trading range. We now have bullish move, but it's not all that great. The start of the buy to close bull trend coupled right here is with bar 70. Breakout because you're getting a 1 hour, which is great, but you're not getting any more than that. So I was still long, and then I failed right here. I exited with 75, did not sell under 75, only because I wasn't sure it's the end of the day. So I wanted to see how 76 was going to close. It is, however, a double top, and it's an M pattern with a neckline. We took out the neckline, we quickly pull back. That's a bear flag. Neckline right there, double top we took out the neckline. That's where I sold. That right there is a bull flag because in a smaller time frame, not a bull flag, bear flag I meant. Smaller time frame, look, I'm going to show you right here. Let's go to 2-minute chart. Right here that's right there, sideways, double top, and down. Or go to 1-minute chart. Look, even better. Look, bear flag, trapped, sell underneath. If you're trading 1-minute chart okay, so I'm going to go, that's going to be a stretch, but I'll do that. you get the patterns a lot better clear on tick charts. Oh yeah, look, that's a trap. That is a perfect bear flag with a bull trap, sell underneath here, lower high, and bam. Look at that. Yeah, you get 2000 tick charts will give you a lot more better pattern recognition than the time charts, believe it or not. But we trade 5 minutes, so let's stick to 5 minutes. To me, so what am I looking for? It's double top neckline, beautiful bar, right? I'm looking for a quick pullback, great entry at the EMA, sell. So I did sell, and I took profit at the diagonal trend line I had, and I was done. I didn't trade any of this because I knew it was going to bounce pretty hard. So it was a trading, slightly bullish breakout at the open. Bull trend turned into a trading range, and then you just trade as a trading range. That's all you do. I'm going to open the question box and take a few questions before I leave. And I will see you guys oh yeah, wait. Tomorrow's Thursday, so next 2 days, I think I'm on. Yeah. Let's see. Question box and go to webinar is open. Yeah, so tomorrow and Friday it's me. I don't know even why I'm looking at this because team is down in Orlando. It is me. And then I think the following week is just a regular, everybody returns. So any questions? We use the 5-minute chart because that's what Al trades. Good question. So Lorita here asking, Rose, at what point you can say you are in a trading range? Thanks for the class. Great explanation. Yeah, sure. So okay. So you have, well, first of all, you're in a trading range. Trading range open. Sometimes it weakens the breakouts. Okay. So, and then there are traps. So, you know, market is going to come back down here, even if it goes up. So what I look for is bear gap bars, a strong pull. Okay. Strong, pull into the third leg starting point or somewhere there. Okay. So you got a leg 1, pull back, leg 2, pull back, leg 3. So we're going to pull back there, right? And we did. So what are the gap bars? Oh, yep, I have gap bars. See, bar 20 is a gap. So that means this is pretty strong underneath the EMA. And then we go sideways and bears make a new low, but then get trapped and go back up. If the bear flags are not selling, but we still make a new low like that, and the bulls take over, and then retest of the highs, fails again, so you know if you haven't figured it out that we are in a trading range, then we're definitely in a trading range. Because what is this? This is a big up, big down, or big up, 3/4 of down is still a big confusion, right? And market is confused. So now bears want to bring market down here, making it even more confusion. But the bulls took over because they were long here. They were long above this bar. Disappointed, so they're buying at the breakout point. Breakout retest is a great place to buy again. But you're not going to buy blindly until you see a good buy signal bar. That's it. You buy above it, your target is up there. So you measure that, stop here. You get a 1R right there, and if this is a trading range now, you should not be going for 2R, but you should be going for extension of the profit taken, which is 1.5. Can you guys hear me? I've lost connection. Can you hear me? I don't know if I lost internet connection. I'm trying to see if my router is blinking. Can you hear me? Can you hear me? Okay, it looks okay. My connection is back on NT, and you guys know so basically you're looking for if more than half the leg up or leg down. like this, right? This puts you in a trading range. Look for the lows to be tested. In this case, you have up, more than 50% is tested. Even if it goes sideways, expect the highs to be tested. So this right here puts you in that trading range. Yeah, I will. I'll go over the M pattern. Next question. Oh, so many. Wow. Let me. Okay. Why did markets sell off overnight instead of during RTH? Thank you. Why did markets sell off? Well, we actually talked about that yesterday. I did these close. Remember, what did I say here? What was this? I marked this. I said upper third of this trading range. Sellers waiting there, right? This is a strong leg down. And is market, look, market sold. That's the second test, sold again, right? And it was selling because this was right here, was basically the sell signal, even though it's a bull bar, but then the next one is a bear bar. But let's take a look at the ETA charts because that shows you the overnight. That's the ETA chart. All right, so you have yesterday's price action right here. Is market made a wedge bottom, is try to go back up, right? So what is this to you? This is a bear trend, right? It's a very strong bear trend with really strong sell-off. Even though it reversed back up, but something is this bearish, what do you think it's going to do? It's going to want to come back and test these lows again. So it's big down, big up confusion, could go sideways and down, right? Big down, big up confusion will want to test the lows, just like I explained on the 5-minute chart. Big up, big down confusion will want to go test the highs. So that's what it did overnight, came back and test the lows. Or you can say, is there a trading range? Trading, yeah. So we have a trading range here. Market is finding buyers underneath. It's a tight balance zone. Finding sellers above, coming back. It's just going up and down around it, right? So it's going like this, that, coming back, deep, goes back, and finally use this area as resistance. But to me, I don't really need this. So what I look at is who's in charge. Bears were in charge here. So you have a channel, right? It's a channel. It's not the best representation, but let me do this again. Here is the channel. Channel high is, I'm going to take that right there. This is an extension breakout, but immediately snaps back in, right? And then goes to the upper channel line. Where are the bullish breakout bars? It's not there. So now we're in a channel. So probably market is going to come down, extend this channel, and extend it. It's going to keep trimming. The mid is section bounce, but really it's trying to go and test these lows. Nothing above this channel line is surviving, right? So you can even so can you do it this way? Redraw it. It's a wide channel, and this is your, see this? Connect those tops. Right here. Connect those bottoms, right? And the midline, give or take, look, is, we had a smaller one, now it's widened, right? So I'm taking these highs, I'm taking these lows. We need bulls failed, we came back in, moved underneath, bear flags, right? Come down and test the low. Now we bounce, but we're not able to get above the channel high. So we come down and retest. So the overnight is, it was a big down, big up, is sideways and down and retest the lows. And then bulls failed to keep the market above this mid-channel line to get up there. If you do these exercises, you'll know where the market is going to go. So we stayed below. That means we're going to go and test. If we break it, okay, you can even do this. Sometimes I do that. Divide that into 2. Okay, right there. Okay, look, we're not able to get up here. So now we're coming down into this, using that as resistance, coming back down. We're going sideways. We're using the mid-channel line, and then we sell again from there. So market was in a head and shoulders pattern. Left shoulder, nothing's closing above the left shoulder highs. It's signaling you that it wants to go test the lows. We have a much bigger trading range now. Trading range lows, market will bounce. Tomorrow, we could come down a little bit more in this buy zone. Look, it's trying to get to the 2R. Still, market has a little bit more time, is about 32 minutes to reach 72.75. We are at 75.25. Oh my gosh, they're just going to reach that 2R. And then after hours, we could find buyers here. After 6 p.m. Eastern time, we could start to reverse back up into this mid-channel line. So into, after market, into Asia session, we could go and reach these levels again, right? So I think this area is a buy zone. So there you go. There's a pattern there. There's a huge trading range. We're going to trap the bears probably somewhere in here. Asia had a breakdown, right? So I'm going to get rid of all of this. So we can also study the other reason why market sold, right? This is in my Asia, starting at not 7 p.m. Eastern time to midnight. It's actually not very good trading range. It's actually selling already. Remember what I said. Asia, and this was a couple of days ago, is these kind of Asia ranges are rare. You never see strong trends in Asian range. Okay, so you always see a tight range, which is very annoying. It's very difficult to trade, right? And then around 2 or 3 a.m., you either get a breakout or breakdown only to trap you and get back in here, right? But look at this Asia range. When Asia range is trending, you're going to get more trending follow through, right? So this is what you get. What I do is I take the Asia range and I find my breakout targets. So into the London session, we have sold, right? So it's 3 o'clock, 2 or 3 o'clock is kept selling and selling, right? That was reversal, trapped, keep coming down, and then into the US session, it just reversed right back up. But it couldn't go up back to the Asia low. So that's already signaling you that this is going to be a bear flag. That's because they're trying to reach the 2R. Like if I do this exercise is on another day, maybe this day, 7. Okay. So that's your Asia range. In the Globex session, right, is what happens is we go and get the 1R, and then it reverses back down. Look where is the Asia midpoint is. Are we closing below it? Yes. That means we're going to go test the Asia low. Oh, this is messed up. Let me fix that. Okay. So that right there is Asia 1R, right? We just tested it to the tick. This is no joke. You can trade with this. We used to trade with this in my past job, other trade room that I used to run. Is right there. People know me. They know that I look for it. That's the 1R to the tick. And then we go back to the Asia midpoint, which is very important, right? And what happened there? We got a bear flag. In fact, we got a wedge bear flag or double top, whatever, lower high, head and shoulders, and they're selling. Where is it going to go? Right there. Now I have 2, but it actually went to 3R. So you can also put the 3R as well. This was a strong sell. I'll do the same exercise. That's all right. So let's do this. Here's one. Let me find the Asia. Starts there. Midnight. Asia low is holding in London session. And you get a nice bull bars, another bull bar getting above. Now, where are they going to target? They're going to target the Asia high. We get a breakout, pull back from the Asia. You can extend this Asia. You don't have to hold it here. You can just extend it just to find your trading range. But you already see it, right? So we get above it. So basically, this is your early Globex level until we get to the US 930. Then the Globex extends, right? Globex range extends. But basically, this is your initial Globex range, initial balance zone. It started to extend. So that's your pullback and buy. Even another pullback, they keep buying. So price is going to get there, takes profit, gets back to the Asia high, buyers show up. It's going to get to the 2R. In this case, it gets to the 3R, traps, and comes down. And in fact, it gets to the 3R in the London session. I think I'm going to add these as well. You know what? I'll do it another time. So you got the point. So you have a 3R. It really gets to 4R is very rare. Like if the day is extremely bullish, like the US session is so bullish, it's just gapping down from the EMA constantly. And at the end of the day, it finally touches the EMA. Like you get that one touch at the EMA. 99% of the time, the market price will test the EMA. Sometimes with that kind of setup, you get 4R, 3R, and 4R. But those, or on FOMC days, you get those 4Rs. But no, average, it's 2R. Really good trend days, 3R. Extreme trend days, you get 4R. Okay, Asia session is important. All right, so let's talk about something else. Hopefully I answered your question. Or I just went off on tangent on something else that you weren't even asking. Why did markets sell off? So, okay, I think I answered. Alex says, I don't think I've ever held a position for a swing. Am I doomed? No, you're not. You just learn, you just have to look at the charts and see how the swing's set up. Like the best way to find swings is look for wedge, okay, and then the reversal. Don't buy that right away. Look for a higher low. Buy that. That's the test. Look for a break, pull back, add more. You're targeting that. That's your first swing target. You're going to be scalping. You can hold more. Sometimes it comes all the way to here. If your stop is down here, you're targeting there now. Okay, so market can resume the trend and go back high. So that's where your runner is. This is where most of your scalping will take place. Okay, you can also count from here to here, 10 point, 20 point, right? If market comes down just about like 6 point, but not able to make 10 point and reverses back up, you're going to look for a 40-point swing. You have to study this and practice it. There is hope for you. You can become a swing trader. You just have to understand the market you're trading. In this case, S&P, I learned ins and outs and how it trades, how it swings. then you can trade. Second entries, great swing entries, right? So for example here, even after hours, right? So this is an outside down bar. That's the first entry. Even if it goes down, there will be buyers wanting to buy. Since we haven't taken out that low, now this is the second entry, right? So that's the next leg. So you're in a swing. Now here's, this is high one, but it's a variation of high one because it's a high close, high open and a high close. That makes it high one. And then this is now high two. So that's also slightly higher low double bottom. So you are now in a swing. So you should look for a second leg, pull back, third leg. Once you count the third leg, you got to think, okay, look, this was the last leg starting point and it's the third leg up. I better take money here, okay, off the table, a lot of them, because this might actually come down and test the lows again. And then I would give back everything. However, it comes down 50% of that swing leg and then reverses back up and takes out the high, then you're targeting here. Your swing now goes even higher. But that's where your runner runs. Or you can re-enter the market, okay? So, but to me, these highs where I swing in and take a lot of profit, and then I measure from here to there and I find my 50%. If that 50% is holding, I look for a second entry long with a double bottom setup. I'm swinging yet again. First, I'm going to take profit at that high, and I'm going to leave a runner. If the follow through is not all that great, maybe I should just take my toys and go away for a while because this doesn't look like it wants to follow through, and then this happens. So you have to really study to become a good swing trader. But if you really want to get good at it, count those wedge bottoms and wedge tops. That's when they set up like this. Creates a double top neckline. You want to see that neckline taken out with really good bear closes. You look for a quick pullback to the breakout point, and you're now swinging. First here, possibly here, okay? That's it. And generally, it forms another wedge bottom before reversing back up. Okay, so study those wedge tops, wedge bottoms for swing entries. Swing to the end of the day is like from the morning. Those days are rare. You're not going to get those days very often. Market is 80% of the time in some trading range, and 20% of the time you might get those breakouts. Okay, so once a week you get those trend from the open kind of setups at 9:30, 10 o'clock those are great. Like this was, no, we did pull back, in fact, because look, from here to here, 7, even, 7. So there's no bull trend, and the bear started to get 20 points. But here, there's a minimum 10 point to nearly 14 point. So this is a trend. It wasn't a one trend from open to close. We get a counter trend there. In fact, this is like, where is it? That's 6, 9:30. We started around here, in fact. So here, that's 15 point. That's right there, 10 to 13 points, so 14 average. Yeah, so that's a trend, that's a counter trend. And then the new trend begins here. So you didn't really get the day that you're describing is you buy and you keep gapping up, or gapping down. And you're either above the EMA, buying every pullback, and it never really pulled back no more than 5-6 points. So so the trend is intact, and you just keep, going in that direction. Those days are rare. You only get it for once a week or something. Okay, so I want to talk about the one question came in, which is M pattern. So there are several patterns. It really is a double top, double bottom, right? There is the M pattern. There is the upside down M pattern. There is the upside down W, which is your wedge, or right W, wedge bottom, so and so. So M patterns are great because they are basically double top bear flags, upside down or W. Sometimes you get this triple, but it really is, it could be high or low, so that's a swing. Those are double bottom, basically bull flags, right? That pullback creates a bull flag. Or you can say so you have a wedge here. M patterns can start after the 1, 2, and 3, double top neckline. You want to see that neckline taken out strong, and you don't sell it right away. You look for a pullback, because anyone who's long buying the pullback wants to break even. And then you look for another M sell, and then you look for another M sell. 3 times, you get 3 flags, flag 1, flag 2, flag 3, before we get double bottom, and it's upside down M pattern with a neckline. You want to see a break and then go. Okay, so that's the reversal. Like for example, let's see, I'll delete everything. This is the 15-minute chart. I can see them here, but let's take a look at the 5-minute chart. Double top neckline. Did we break the neckline? Yes, but we never pulled back. So what are we doing here? There's a neckline here. We broke it. You can sell that. That's the flag. Okay, that's the pullback. Here's another M pattern with a neckline. Did we break it? Yes. So we're going to continue coming down. So that's my first. That's my second. I'm looking for the third bear flag. Oh, look, there's one right here. There's an M pattern, neckline. They broke it, so it's going to sell and test the prior lows. Then it pulls back, right? Another double top neckline. I'm looking for this neckline to be tested and broken. They broke it, so this is going to keep coming down. So you have it's 1, maybe 2. Here's 3, another one. M pattern, neckline, really nice break. It's probably going to sell. So what I do is I can take this, project it 1 time and 2 times, and I take profit. So I go like this. 1 time, 2 time is you can extend. That's 1R, 2R. That's 3R, and that's 4R. That's 5R before it actually reverses back up. There's one right there. That's the neckline. Broke the neckline. 1R, 2R, 3R, 4R, gosh, 5R, 6R. I don't know. I've lost count. It keeps coming down. But you see, that little one created that. So what else? Like this. Here's the upside down M pattern, which is really a double bottom neckline. Double bottom neckline. Whew, look at that one. Huge. So it's going to go. So what do I do, Roger? Roger, are you here? Are you watching? So here we go. Stop there, entry there, 1R, 2R. You should be taking a lot of profit here. Anything more than that is just your runner running, and it may not run. But it got a 3R, and it couldn't close bull bars above the 3R. See that line? So that means it's going to come down. Try to maximize 3.5. 1, 2, 3, 3.5. But because it couldn't close bull bars, it's never going to go to 4R or 5 or 6 or 7. It's done. It's going to come down. There's one right here. Even here. Look at this. Sorry, double top, neckline, broke. So hold it. 1R, 2R. Came down. Right? So it closed bear bars. Even though it pulled back, that's a double top neckline. If you're looking for continuation, more But you can either use this, but since you got a new one, I'm going to count that one. Double top is neckline, 1R, 2R. I take a lot of profit here. Oh, look, another one, continuation, double top, neckline, broke with strong bear bar, 1R, 2R, and then it reverses back up. And then it gives you another one. Gosh, this is keep selling. Even if you exit, you can sell. So you get this? Same thing for the bulls. Look, double bottom, neckline, or neckline, because you're not seeing any of this here. Look at here is, look, double bottom, neckline. So I'm going to measure it. But I need a bull bar to say that this is actually going to break out. So I'm looking for a bull bar. Oh, nice, break. So I should get the 1R and a 2R maybe. Oh, here's my 1R. Did we get the 2R? Oh, yeah, we did. One tick failure. What else is new? So that was a one tick failure. I think it is one tick failure. I don't know. 1025. No, it's not. It's actually exactly 1025. Look, 1025. There's no 2R failure. There's no one tick failure. It exactly reached the 2R. This is it. The swing right here. Counter trend swing. Here's another one. Look, it's double top neckline. It's a bit of a wonky one. I don't like it when the necklines are bullish, but who cares? I mean, you don't need this, right? So you can actually have, you don't need color. It's just the pattern you're looking for. There it is, right? So here, double top neckline. I'm going to measure from that high to this low. This bar actually broke the neckline, this right here. So I should expect follow through. 1R, 2R, and then continues down. 3R, 4R, even 5R. Look at that, to the tick accuracy. 5R before reversing back up. Now what do I need? I need well, I have one, kind of a double top, double bottom neckline. I don't like this wick, so sometimes when this happens, here's what I do. I take that, I minimize it, and I use that. And I go for it, because this is just too much. Because I don't know if we're going to be able to close these gaps. So I'm using this. Okay, so you get your 2R, it's going sideways. You see more bars closing above 2R. Nope, nothing. Over there they are, but there was also, when I see these big wicks, those are bad price action, I exclude them. Like there's one right here. This is perfect. That's neckline. That's my 1R. And then it went got above it, that's invalidated. You cannot count this anymore. Even if it comes down, you cannot use this because this one went above and took out that high. I used to trade this all the time. Tick charts, 4,000 tick charts, 2,000 tick charts, 5 minute, 1 minute. 1 minute gets a little weird, but 5 minutes perfect. So what else? Oh, here, look, this is a big one. Double top, diagonal, neckline. Oh, look, big bar, broke it. 1R. Okay, double top, neckline. So I can use this as my 2R, expect a follow through. I got the follow through. Took a while, but it did. Or you can say, hey, I'm just going to measure this one because I already exited, but this is giving me another opportunity to enter. It kind of got a hiccup here because it didn't break anything, but then it did. So you got a half R it went up because there was no double bottom there. There was no double bottom there. So it's going up. This would make me nervous. I would scalp. I always get my initial scalp at the half R in case it reverses on me. This one reversed, but there is no double bottom. Some will say, but this is double bottom. This is a neckline. This is double bottom. This right here is double bottom. Can I take that? I wouldn't, because it's so lopsided. I would not do that. I would not take that. Because to me, there's still, I see double tops and necklines to the downside, but then this happens. So this is really a pullback, okay? But if you're still short, your stops up here, you're kind of safe. And we come down, now I would get nervous because we're not getting to the 1 hour, right? Everybody got disappointed with half hour scalp, expected 1 hour. So what they do, if you extend this to the left, basically that's the trading range, is it's giving you a scale in, sell at the 50%, break even, okay, where you might have trapped, which was the half hour. And then market is showing you, listen, I gave you a scale in from the high and then sell and break even, but I'm also showing you a hint that you're not going to get at 1 hour. I'm not closing any bars underneath the half hour. So maybe it's time to exit. So now you have a double bottom, neckline. You have another opportunity, this time, buy into it. 1 hour, 2 hour, so and so. Now you have another opportunity. Double top is neckline, break, 1 hour. Continues into, it couldn't make it. It just couldn't make it. That would have pissed me off. That would have made me very upset. I'm looking for this and I'm not getting it. But then you have a double bottom neckline. Double bottom, that's the neckline. Take that. 1 hour, 2 hour. Oh yeah. Okay, that's it. Couldn't get the 2.5. And then double top, neckline. This is the neckline, sorry. Double top, this is the neckline. Then 50% tested, sells 1 hour. 1.5 is extension, but that's it. Double bottom. One of these are necklines. You can use either. Half R, but it can't seem to get up there. So what is it going to do if it cannot get up there and you're stuck here? It's going to pull back into the 50% of that double bottom neckline, which is right there. It's going to give you another re-entry to fix it if you're stuck up here. And it's telling you something. Look, I cannot, for the life of me, print bull bars is above, 2 consecutive bull bars above here. So nothing's there. So what are you going to do? You're going to exit. You're done. It gave you a re-entry and exit. Done. If you're not getting 1 hour, that means just like the other one that we just tested, we just practiced, this one's telling you, I'm going to send you back to where you came from by allowing you to scaling at the 50% of that double bottom neckline. But if you're not seeing me closing any bull bars, don't bother, just exit and look for a double top neckline. There's several. There's a bigger one right there with a neckline here. Bigger one, double top neckline, but nothing's taken out the neckline. However, there's a smaller one. Is if you're in a trading range, so you should look for smaller patterns. Double top neckline. Yes, we have a break, so I should get that 1 hour. We got a 1.5, but nothing closing 1.5, so why can I not get this? Where is this going? It's going back to the 50%. Went back to the 50%, couldn't go higher, but it's giving you a re-entry and then gives you a 2 hour. Now you have a bigger double top neckline. Double top neckline and a break. Half R, great way to, because this distance is so big, you should always take profit there. And that's your 1 hour, and that's it. I mean, if you study the way that I study, there's a trade, and I'm 200% confident you can trade with this. Okie doke. I am very tired, and I think there are no questions. I answered everything. Excellent. You all have a great evening, and I'll see you guys tomorrow. So you all are with me Thursday and Friday morning, and then regular scheduling kicks in next week with June. Okay, bye everyone. Take care.